All right, thank you. All right, let me send this out to the members. And we'll get started. I'm in ES right now. 1 second.
I got 2 copies.
Give everyone a second to trickle in here. ES breaking back below that prior low. It's gonna, if it gets below 4220 SPX, I'm gonna be more concerned. I think it actually is gonna get below. I didn't expect it to break down here. We'll see. It might hold here. Overall, it's positive flows intraday. This could change on a dime, but right now we have positive flows, and once we hit the turn and volatility starts really crunching, we're going to see a massive short-term move to the upside. Whether that's, the low and the move is still yet to be determined. It's our lean. It's a current working thesis that today will end up being the low, but it doesn't need to be. It can be a rally today and then sell off, and then this persists through Thursday morning and then sell off and finish the move Friday. I believe it's going to be very hard to combat what is a very supportive surface the last 2 days of this week. We can go down with supporting flows. It just means we won't stay down there and you get a low if it's heading into a major window like we are seeing for this OPEX and for Q4. We held 42.20 and bounced 7 points off that spot. The market is severely underpricing, so I'm not. I take short-term trades. If you're in the service, you see I take, I trade intraday, and I'm also trading on larger frames. So intraday, there's mispricings on a 1% to 1.5% upside day. I mean, we're flat right now, and we haven't seen upside, and skew is just completely out of whack in the short term. It's completely underpricing possibilities of upside. Doesn't mean you want to fucking throw all your money on a same day option, but it's worth the risk for me, and I will take this trade every time I see a setup like this. And if it doesn't end up being right, here at some point in the next few sessions, it's going to be here or Friday, in my opinion. You're going to catch a move off some sort of new low that is a beach ball underwater. Let me mute. If you're joining up, can you make sure you're muting your mics just so we don't have any background. It's going to be a beach ball underwater. This setup is 100% a beach ball underwater setup. We already have gotten, if you're bearish, you're seeing everyone talk about all these shitty things going on and credit event and few understand all this bullshit. It had to happen a week and a half ago, 2 weeks ago. You have given dealers too much time to get, it needs to happen fast. It needs to happen acutely, and if it doesn't, everyone's betting on this outcome and it doesn't realize. It's very hard to realize an outcome that everyone's positioned for that becomes expensive with high demand. It's going to lead into what becomes a volatility unwind. So everyone's betting on the end of the world. End of the world gets priced expensive because everyone's betting on it, and the end of the world doesn't occur. And as soon as that doesn't occur and you just paid a premium for all this protection or all these speculative tail bets, that creates a bid. And in this cycle into Q4, that bid is sort of like it fuels itself, because as soon as this starts, it just creates a chain reaction, and it's just going to keep like crunching all the volatility from here through December and January, which is still very elevated and will take time to unwind. It's just going to continuously unwind as we keep going higher. That's why this opportunity is probably the most lucrative one I've seen all year. And I have been early. I have no problem saying that. I'm early on a lot of my core theses. Sometimes it happens, but they're not meant to play out in a week or two. I'm looking for this to play out into Q4. ES is up about 10 points here. I'm holding everything. The trade isn't 10 points. The trade is 1% up today. You could take, if you're going to look to take, let me share my screen so we have something to look at. I have my shitty SPX dealer positioning drawing on. I'm going to start trying to give you guys a little picture of what flows are looking like, so you have something to reference while we're trading. I just put the stream up. Let me know if you guys can see it. Oh, did my Discord just lag out? Am I in here? Hello? I don't know why I'm saying hello. I have everyone muted. Share screen. I think my Discord lagged out when I did that. All right. See if you guys can join that, and then someone just confirm with me that it's working. Someone from my group that's paying, confirm. Because I think we took out the free chat for non-paying members. Let me check the chat. Someone go into trading chat and let me know if you can see everything before I keep going. Yeah, I think it's working. All right. Still haven't. I don't know why no one's saying anything. I think it's working though. I see like the little eye icon. All right. This I don't know. I'm not too good at drawing in terms of the dealer flows, and it looks like just horizontal lines. But these are where. All right. So yesterday we were here. We had this drawn from up here. Or from over here. This was prior. Don't really disregard this for now. This was the path yesterday was down to here, and then we were expecting a move back up. The max downside possibility, if this isn't the low that we achieved, this is SPX, not ES. ES made a new low overnight. Is down into this zone. This will be the first hurdle, but if we got here, I'd expect to see here. If we continue higher from here, the first hurdle is 42.50. That's where we tested this morning. Let me remove this. As soon as we get over that, it is straight shot to about 42.75, 42.80. Today's a little hard to. So today is hard for me to. My target is a lot higher. It's really weird right now because we can really hit an explosive move if we get over 42.50. I think 4,300 is completely in the cards intraday. If we get over 4,300, which isn't, we'll see. I mean, it's early. It's more of a weekly target, but we have room into 4325. And as we move over 4,300, initially the wall that we mentioned was around 43.45 and 43.50. That has moved up a bit, but it looks more like it's going to be an affair for October 9th, Monday. Still plenty of work to do. This is just our highest confidence path right now. Would be somewhere around here by end of week if today was the low. If it wasn't, we're going to rally into one of these zones. Granted, we break over 43.50, which is the lean, and then come back down over here before starting this move next week. And next week would be extremely positive. I want to take it one step at a time. Right now, we're not sure if we have the low, but what do we do know? We do know we have supported flows today. So weakness, if we see any more, is a buy. We entered, we mentioned too that over here this was the initial low at 59.50. We had a room below that. We wanted to test around below 25 SPX and make a new marginal low. It came. I thought it was only going to come for a tick. It came back down a little more than I suspected. But we mentioned in the group that next low is where you want to hammer it. I posted some of the trades I entered just so you guys could have a sense. I didn't want everyone to join the call that wasn't involved and not really understand, what we're trading or what we're involved with. The CVNA I'm in is, so I'm either looking to trade something with a lot of convexity. I'm selling something that's expensive, and overall the prevailing premise, I want to buy cheap, I want to sell expensive. I'm looking for things with convexity where I can take them from low deltas to high deltas, and if I lose it's a small loss. I'm not paying up. CVNA, I posted the 47 calls for next week. Those I don't expect to hit. They're lower. It's much lower than 50% probability on the path, but it's much higher than what the market is pricing in. And overall, I think it'll be tradable with premium. I think if we do get a move to 42, which is my first target on CVNA, and that'll really decide whether or not it's going to hit a squeeze-like move if we get over 42 in a very short amount of time. I think by that point, we'll be able to have risk-off profit banked. It really depends on how much volatility comes in or increases on some of these single-name equities. It's kind of harder for me to know what's going to come on the back of a $4 move on CVNA. I would expect well over 100% though. The 361 calls for same day, I got in at 8 cents. They've come back down and traded like a penny below that. I'm holding those most likely until the close if we get the right move and the script I'm eyeing up today, which is trend up after opening move and first hour dip. We got the dip first hour. We made, did this confirm? Low 54, that did confirm. Oh, I didn't know that confirmed. Either way, so we might still have more bullshit to do in this this zone if we don't hurdle 4250 SPX on this move. If I stop talking randomly, I got to make sure I don't just continuously rant. I got to make sure I'm checking the reads and keeping up with the new flow coming in. Let's see what's coming. I like the 46 for the 9th. October 9th, I like the 4,300, 4,350 call spread. It was trading around 650 when I looked at it. I have that horizontal still open, that short the 4,350 this week, long the 4,350 next week. And I will be holding that through next week, but you can trade it into Friday if it's, if we're close to 4,350 and the front's expiring close to zero. let me go. What else did we add that I posted? The SPX posted on the ad. They were up about 100% a second ago. Again, I think you can take profit on these moves. I mean, ES is up over 13 points. It was almost 20 points a second ago. But for me, I'm personally looking for the larger move intraday. There's no shame in trading this stuff. If I had traded more of the moves, the last 2 days, I would be sitting in a better position on my weekly P&L. But I'm looking to catch the larger move from this volatility crunch that we are going to see. There's almost it's such an outlier that we don't have. That's why no one in the vol space that I know at least is concerned at all, like you're seeing on Twitter. It's so hard to have a vol event at this point without, it would have to take like a war, something completely. I don't even know. Like we had the Ukraine. I've mentioned this a couple times. We had the Ukraine war when we had supportive flows the other year, and it was so hard to sustain weakness even during that window. I think we only got 1.5 standard deviations down. It wasn't anything crazy, and this is to a much higher multitude, much more supportive. Once we hit the turn, it's going to turn from unsustainable weakness. It's been a very orderly drop. This has been very mild. This hasn't been we haven't seen the bid and ask be in the 90th percentile, the NBVO be in the 90th percentile. We had one or two volatile days in the week we mentioned. I think it was like a week and a half ago, and we were like, this could be a vol event here. Fixed strike vol is moving enough that if it continues on this path, things could break in the short term and cause a mini, Volmageddon. It didn't happen, and now it probably is impossible. It's almost impossible for that to happen, barring some complete black swan event that you don't want to bet on. You don't want to bet on an outcome like that. I think I'm actually going to take some profit on the ES. I'm going to give it 1 second. Let me see. Let me pull up my IB. A minute. Teeing this order up. I definitely don't want to sit through another marginal. I didn't see that low on the 5 minute. I'm going to put either a trailing stop or, no, I don't want to put trailing. I'm going to put, if I go 4 down, I'm just going to take it. I'm out 61.50. I will be back involved, and that might be a terrible sell, but I don't want to risk I can get a better entry if we have that last marginal. Exit ES 61.50 full. We'll look for re-enter if additional marginal, otherwise holding options. Yeah, my bad. I was busy talking there, and I didn't even notice that we did confirm there. And let's see how positioning for me in this area is hard to ascertain exact spots, aside from the fact that it is going to turn into support, especially the later half of this day. We're in positive intraday flows. Whether that carries over into the latter half of this week is yet to be determined. We have positive flows that are going to begin starting Thursday and Friday, but if we go up too high too fast today, and repositioning changes on a shorter frame for end of week. This is the last bit of the window where I would say we could make the final low. That's why we mentioned this week we do expect a low of this move. We are looks like we're heading back to make another marginal. I will enter ES again on that marginal. 1 second. Teeing up this order. My interactive broker has been so laggy when I stream. Then I gotta run the 2 PC setup again. I don't know what you guys trade on, but I absolutely hate the charts on interactive brokers. And I've always had some scripts I like to use on TOS. And any of the same day stuff that I'm in is a lot of risk for me. I'm not expecting to, that's what I was saying, don't go crazy on same days. Make sure that you're not, it's not an expectation, it's just a mispricing from how we analyze the market. Let's wait to see how this low comes in. Hopefully we get it sooner than later. We don't chop around. I'd honestly prefer if after, I do expect we come back up to make, unless we break 4220 SPX and sustain, I do expect we have one more round trip to 4250 and peak above. If we don't sustain that move, I will exit anything for same day, and ideally we get that down move and capitulation, new lows of this last move on ES today into the close. Maybe it persists through tomorrow AM and creates. When we were coming into this week, I was looking for Wednesday to be the low and either turn by the close or Thursday morning be the best buys. That was coming into this week. Not much has really changed in that path, but these are obviously can change on a dime with how much 0 DTE is coming in. It can't change the big picture. It just can change, the exact timing and trading in on the really short frames. I think Google announced, I got some ping, they're doing a Pixel Watch. I'm looking for 100% on those. Those have been up most of the morning. So let me put some new annotations in. All right, I just muted that person. Let's get this in here. 42.50. Let me put. This zone is either going to be, I'm going to leave it with this color just because you can't really see it when price is in that zone. This is going to be, I'd say the intraday pivot. But yeah, the trade for the 9th, I still like the 4,300, 4,350 call spread, and you could pair that with a weekly put spread as well to play the edges of the distribution into these zones below, like a spread into there and then a spread over there. We added to Rivian today for December. Rivian's already, those contracts are already above $1 now. Rivian I really love heading into Q4. It's one of my favorite picks. We were speaking this morning about Apple as well. I'm not really positioned for Apple yet. We have a starter on, but if this thesis plays out, Apple's gonna lead the charge. It's gonna move with the market. It's quite. I find it very hard to believe Apple is still tanking or experiencing, sideways action as the market climbs towards highs. In this cycle, with higher interest rates, the cost of money goes up. If you need to borrow money, and if you don't make that much discounted, or you don't make that much money, you have not as strong discounted cash flows, you're in trouble. That's like people talk about, this market's supported by 7 companies. Well, you have to understand that those 7 companies fucking print money. They absolutely print money, and they have money, and they can put that money into money market. So when fuel prices go up and they're getting 5% or 4.5%, 5% on all the money that they have stockpiled, that offsets the fuel prices. That offsets the rising cost of a lot of things. They're able to eat the hit of inflation because they're getting paid 5% on whatever they can put into those money markets and different vehicles. So they're not getting as fucked by higher yields. They're gonna benefit a lot. They're not gonna obviously it's a negative. It's negative for overall markets, but they're not going to see as much pain because they're going to get cash flow from just having cash, and they have more than some countries. The amount of cash they have on hand is ridiculous. And that's why during a year where we have rates going up, these companies can be the only 7 companies that lead the market higher, and we're doing we're up a very large amount this year from last year's October lows. We're about to come into that low. Overall, I don't think I wouldn't lean that this, not yet at least, that this move up, uh, at least pattern wise, this doesn't really look structurally like a new, uh, a, a bullish impulse. This is kind of a mess. We'll see how this shapes up after this low. Because if we make this low and then get above 42.50 and sustain, it'll look much better. It's hard to know, like positioning wise. This week is, like I said, the last week we're going to see sustained weakness. But if that's going to be today or Friday, I don't really care. I know I want to just add for my swing positions and make sure I'm buying enough time. So whether it's today, Friday, if it takes a little more time, if we're wrong and it takes Monday or into next week, we have time to be wrong, because the downside from here is marginal compared. The risk reward is heavily skewed to the upside. And if you're playing for more downside, it is priced for perfection. You have to use multi-leg strategies. If you're buying straight delta, and the second you enter, if it doesn't instantly start moving lower at a rate that is equal to 1% down a day, with where VIX is trading, you're instantly losing money. Let's see. Let's see. Google just made a new. Did it just make a new intraday high? Yep. Non-confirm high. Take that out. Also saw an interesting take that higher inflation can help to inflate their revenue numbers for earnings. I don't think higher, like, you mean just like because things cost more? Everything costs more. It's not like a rising tide raises all ships kind of thing. If you're talking about inflating their earnings, they are doing that via buyback. They're not inflating the numbers, but they're inflating their stock price. Ben, what are you talking about? We're not even talking about a price movement. Just earnings. I don't ever analyze earnings. I don't really care about earnings. I strictly stick to my system. I don't care about news unless it's some sort of black swan or an immense change to the macro framework, and it's going to affect liquidity through the pillars like M1, M2. I don't care about anything else besides supply and demand and dealer positioning. Supply and demand as far as liquidity on options, liquidity in terms of dealers positioning, and volatility. I don't really care about any earnings. I talk about stuff like that. Like I talk about how Apple might, those companies doing the Big Seven, Magnificent Seven might do better because they can get return on their money. I don't really. There's nothing I can trade on that. I think any analysis, fundamental analysis, is just, of course, it'll matter again sometime, but, when's that going to be? The only thing that definitely does matter during the period of inflation, is how much money you make. Because if you got debt and you need to borrow money, you're just fucked. You can't sustain a business or start a new business right now. It's just impossible. It's very hard. The chips are stacked against you, opposed to a time when everything was, you had wind at your sails. Fundamentals are more for like buying and for the next 10 years, shit like that. But I don't know. I have trouble seeing. Since 2008, we've just opened Pandora's box with financial engineering, and we've created like an environment where it's very rewarding to be in debt during. Like it's not like atypical of anything prior to 2008. If you look at fundamentals and stock prices in relation to what we saw prior to 2008. It all matters to a certain degree. PE ratios come back down. PE ratios are, at fair value pretty much if you don't look at all the other macro overhangs. And that's largely in part due to basically every company shitting the bed this year aside from the 7 that are leading the market. Yeah, I mean, the real estate is fucked, but when is it fucked, Just like the market. It's like, I don't think it's fucked like people think, like it's going to be this massive crash. I think it's going to be a massive reset in price. And I think America is going to be fine because we have money. I think if you're a third world country, you're fucked. If you can't export inflation and you don't have a strong economy, a stronger economy, it's going to be really hard for you to survive this period. Of course, something can break, but in my opinion, this is just going to be a really long and drawn out process, like every other inflationary cycle. It doesn't get curbed in a year. It doesn't get curbed in 2 years, and if it gets curbed in 3 years, we did a good job. It's a very long cycle, and I expect we get stagflation. When COVID hit, I was expecting stagflation. If you saw COVID and you saw the money they were pumping in, the first thing you think or 100% just accelerated the cycle. We have inflation coming. Inflation's here, and it's going to be a problem real soon. And overall, how this cycle is shaping up, it's very similar to the 1960s, 70s. I think they need to keep raising rates to a degree. It really depends on it depends on the data. I'm not really that. This isn't my. I don't care if rates go up to 8%. I care what changes in terms of how I have to approach markets if that's the expectation. Like I don't. I think we're going to have a moment where we realize we didn't do enough and we have to do a lot more in a short period of time. And that could be a lot sooner than if we go into December, like let's say I'm right about this thesis I've been mentioning on Twitter, and obviously you see that I'm bullish into end of year. Let's say I'm right about that, and we go into the December FOMC and complete, like let's say it's an outlier. We're at 4,900 or some shit like that. You think Powell's gonna? You think 50 is gonna be off the table at that point? Powell's sitting there like, fuck, I'm fucked. Like everything is going bonkers, and prices are going bonkers. Aside from asset prices, it'll be like round two, whipsaw inflation back to the top, and he has to start fighting it with some chunks. That's one scenario. I mean, I'm not trading off this. I'm just talking. Or there's always a period after the initial onset of inflation where you have a year like this, where everyone takes a breath of fresh air and it's like, oh, it was just a 1 year blip. It's crazy. It's happened every inflation cycle. And after that, they get so boxed in and so fucked. And hopefully Powell is, and it does seem, honestly, like Powell, he's still fucked, but he's handling it using the knowledge like from past cycles a lot better than the Volcker did in that situation. He stayed consistent most of this year. In my opinion, there shouldn't have been a pause. Like the data can tell you to pause, but the thing with the Fed is they'll never anticipate. They will always react. That is the only constant with the Fed. They will never anticipate where the problems will become problems. They will react when they do become problems. That is the only constant and certainty with the Fed. They will never anticipate, and that's largely in part the issue and how we always end up having these huge, bearish events, bearish outcomes, because they're going to react to that outcome. They're not going to anticipate it and do the things they need to prior. They don't want to kill the golden goose, but they have to kill the golden goose because you have to get rid of inflation. Inflation's going to ruin people's lives. Like majority of people that are living below like the median income, they can't live right now, and they have to curb inflation. Like that is the biggest problem they have to take care of 100%. And to do that, they're going to have to induce a recession to some degree. We really can't end inflation without a recession. And you just hope it's a recession. I don't think it's going to be anything greater than that. It totally could be. It could be something to a much higher magnitude. All I want is volatility. I hope it's not a really long, drawn-out, slow process. If it's a really long, drawn-out, slow process, it's going to be, and I think that's an outlier. I think what we saw last year was a long drawn out pullback prior to the completion of this bull leg that we're going to see this year. They know they have to kill the economy, career low about war. Every inflationary cycle, there is a war, pretty much every time. There's always a war. We had the Ukraine war. Hopefully that's it. It probably isn't. To some degree, we're going to have some. I already think they have to not be dumb enough to think we can even do anything if China invades Taiwan, because we can't even. We got to just be like, yep, okay, it happened. Sounds good. Taiwan is China now. Because if we do anything about that, then it's going to be a bigger war, a bigger problem. Is going up a lot volatility too? For me to answer that question, I think you got to phrase it a little bit better. You mean can volatility increase? Volatility can mean three things. It can mean people might be talking about the VIX. They might be talking about fixed strike volatility, which you don't see people talk about often, and floating strike volatility. Volatility currently, I mean, it depends on which volatility. There's three volatilities that you might be talking about when you're talking about volatility. VIX is the measure. Everyone thinks it's the fear index and all this. It is the measure of a one-day move on SPX on a 30-day rolling basis. It is a formula. It has nothing to do with fear. It is literally just math based on option prices. What is the 30-day, the implied, see, like I have this, let me see if I can, you're watching my screen. IV of 16 indicates expected one-day move of 1%. It's always a good rule of thumb. At 16, it's a 1%. You're expecting a 1% move every day. That's what the market is pricing in. Volatility has, by the way, whoever told you volatility was decreasing the past month or two, I wouldn't really listen to them for vol advice. Vol has been increasing on SPX. IV has increased. Fixed strike vol has never really exploded. We had one day, like a 1 or 2 day period, where what you really need to worry about is if fixed strike vol moves at a rate that is exponential in a short period of time, which creates those multi-sigma or multi-standard deviation. If you don't know, sigma just means standard deviation, moves to the downside. Volatility is the catalyst for when shit hits the fan because it changes the dynamic of hedging. When a dealer, when you buy a 4260 put and volatility is not at a certain percentile, fixed strike vol isn't rapidly increasing, the dealer short that contract. The dealer will hedge a percentage of that trade, not the entirety of it. They'll hedge a percentage of the deltas depending on time, vega, and the notional of the trade. If volatility is expanding and we are rapidly moving lower, they will hedge 100% every time that they transact. They don't want to transact. They have to. They have mandates. They don't want to sell you a 4260 put, but they have mandates. They are the dealer. They have to make a market no matter what the market is. But when volatility is increasing, the reason why these things that matters is because if volatility is increasing and their mandate or their hedging, how they hedge has changed, instead of it being like a smaller percentage of that 4260 put, they hedge 100% instantly. Boom, market went lower because they hedged. More puts, hedge 100% instantly. Boom, vicious cycle. It just is the same cycle to the downside that I was kind of referring to about the unwind to the upside. It's like rocket fuel. It follows expanding into lows. We have not seen that aside from one day so far. It was like right over here. We had fixed strike vol expanding during this period. Throughout this, we had like one more spike into here, and then ever since here, we've been making. We have not been increasing in terms of fixed strike vol. So volatility has been coming in on fixed strike vol, but volatility hasn't really. The volatility unwind won't begin until. Let me put that back up. Until implied volatility really starts declining. So there's a reason it's really hard to trade options off the lows with time. It's because when this goes up, this raises the price of calls and puts. But in this scenario, it's really there's a huge skew into Q4, which is a lot of the reason that I'm bullish. Calls are extremely cheap compared to puts. Puts are so expensive. When puts get expensive, it's generally not, and you have 2 months into a declining market. Unless something's like bursting in terms of volatility or something's breaking and there's a black swan, it's very hard to sustain 1% plus down a day, which is what volatility is pricing in. And if you don't sustain that, the second you stop sustaining that and you turn and there's a pop and that vol starts coming in, all those puts and hedges become fuel. I'm ranting. I think I've gotten off the beaten path from the question, but people say volatility is market going down. A volatility can increase when the market goes down, and it generally does, but it doesn't have to. Market can go down with volatility decreasing, like we saw the entire year last year. Volatility is just an expectation of a move in the future. If you do not realize that expectation or go beyond it, volatility, and there's a trend to the volatility too, you're not realizing that volatility. Unless you realize that volatility, it's really hard for a hedged market to sustain weakness. VIX can rise with the market, but VIX is one measure of volatility, and it has a lot more to do with option pricing and expected move for the day than fixed strike vol, which is a lot more important in my opinion. We're trading at 100% on the. I didn't mention Google in here because we had Google from yesterday. We never made the marginal low. All good. I still have my options. That's why I kept them open. Let me tee up this order. What do I got? I got 40. I got 45 of those Googles. It's about to be 100%. I don't know if I want to get cute. Anthony, are you in here right now? I think he's got Def in. I might take this full Google back. Actually, no. Let's see. It's all about 42.50. We're at 42.40 here. I still think we could come back down here before we get to 42.50, but let's see how far we get on this move. Hey Anthony, can you hear me? I don't know if you're able to talk. What's happening? You want me to do a vertical stand right now? I have like two desktops. Yeah, my wife is buying like a really nice one pretty soon. I'm so bad at getting this. I think I have a way through like Droid Cam to link it to my PC. Actually, hold on, let me do that. Let me change this. No, yeah. That's what I'm gonna do. I get a lot of like news pings on my phone. No, yeah, I'm gonna do that right now. I don't know. I don't think this was even recording the whole time. This is make or break time on those 42.75s. What do we look at for positive order flow? I don't think there's any way you could just look at like you'd have to model. You'd have to look. You'd have to get API and match up every trade. If it was a buy or a sell, and you'd have to understand what you do with trades that were executed on the mid, which is the majority of orders, and you have to create a surface of what the dealer's holding and what the customer's holding. Again, that's another. You'd have to know how to basket those orders, and unless you're doing any of that, you have no idea what the order flow looks like or what the dealer's book looks like. You're just guessing based on like open interest. It means nothing. Open interest can just tell you like there's a lot of buyers and sellers here, and it might mean something for price, but you don't know what it means. And there's tons of strikes with a ton of open interest. It's overall, it's like looking at the most obvious thing in the world and thinking that it has meaning. Like it doesn't. Just knowing that it was traded isn't meaningful. You have to know where it was executed and who's holding it and what type of regime we're in. What's the larger picture and the entire surface telling us what pressure, what exerting force is going to happen in terms of price, if any. There could be a pinning force. They could be delta hedging a straddle all day, and you think we're in negative gamma, but we're just pinned. I think the best thing you can do is retail without like a super deep understanding of like derivatives, exotic derivatives, and how these products work, because you really need to have a very in-depth knowledge. I barely scratch the surface on this stuff. There's people that are way smarter than me. I just know enough to be dangerous and to have to know how to interpret my reads. It's not. There's people that are you have no idea how deep this rabbit hole is with options. There's such complicated math that goes into this stuff. But aside from that, if you're trying to look at it from a retail perspective and still get valuable information, I think Trade Alert Institutional Feed is a great tool. It's, I guess, pricier on this. Like I pay a ton of money for data, but in terms of like the retail flow services, it's a little bit pricier. I think it's like $400 a month. But it's customizable, and you can make it. You can create any outputs you want and analyze any types of trades by just, it's like all scripted. Like you type in the scripts and commands and what you want it to prompt. And once you understand it, you could literally just trade with that if you know how to really use it. Yeah, it's CBOE. Like, you don't need technical analysis. You need to know when things are expensive in relation to, like, if something has gotten irrationally expensive, you can look to sell parts of the term structure and, you know, buy the parts that are cheaper. There's so many ways you can go about trading, obviously, but it's really hard from what's out there without like the flow services out there are really complete bullshit, man. Like, they're absolute bullshit. They're just showing you every order executed, and they're majority of the time they're not showing you what's also being traded with that order. Like, you might see Disney 80 call sweep for this week and not see the 2 seconds later they sold 5x the amount a week later, and they're just trading for, it's a net negative, but you're seeing 80 calls and like, oh, it's fucking bullish. And you don't know what those orders do in terms of the dealer's book. Like, those orders could, instead of what you think is bullish and all these customers are loading out of the money calls, it's actually creating a scenario where price can't really move higher, or doesn't move higher for multiple days because everyone's buying these calls, and then then you're out of the trade, it's gone down, theta's decayed, and then it fucking ramps. It's really hard to understand, like, have confidence to stay in the trade or know what you're doing, besides just throwing darts, when you're just looking at 100 million orders that get executed every day. Like on Trade Alert, you can filter what's traded on the floor. There's still executions on the floor. You can filter certain exchanges. It's not straightforward though. It's not like it's not an easy user interface, but it's worth learning, because while you learn it, you'll have to learn what you want to see, and you'll have to do some research on, like, what do you want to see. Like, do you want to see high Vega with IV in this percentage? Like, there's so many ways you can start viewing the option market beyond just like everyone who's traded straight delta calls and puts today. You can start looking at who's traded calendars and multi-leg strategies, and usually the guys trading those over like 10 million premium, which isn't all the time, 10 million premium with high Vega, those guys usually have some degree of edge, and you're not seeing those orders ever on Flow Algo, Cheddar Flow, on any of, and I have no affiliation with Trade Alert. I've talked to them about it. They're super old school. They actually got bought out, I think, from now they're with the CBOE. They used to not be on the CBOE. They used to just be, it was like Harvey something ran it. Trade Alert's been around forever. Their system is like really, you're going to be overwhelmed, I think, if they have a ton of videos and stuff though, and you can get it set up in a really simple way that still is much more valuable. And if you take the time to like print out the commands, because you're literally typing in commands to like get if you want to do deeper dives or look for certain things, and you can script so much. It's so customizable. It's the best tool you can have as retail to analyze flow, in my opinion. You can see which side of the market things were traded. the aggregate of that. It's the aggregate, but you're gonna see majority of the time that like 70% of the orders, if you're looking at index, were traded on the mid. But you can also make some inferences on dealer positioning if you track it. It's hard, but the dealer is the only market participant that can trade SPX not on a 0.5 decimal increment, and you can see those orders. You can see every order executed. But you have to understand, when they're executing an order, a lot of the time they're not, the flows that will come out of that order are not what you see. If they're executing a call and you see it's, dealer positioning and it's definitely dealer executed, they are, if they're shorting a call, you're like, oh, the market's going to go down. No, that is more bullish than bearish. They did delta hedge that call. And delta hedge means they have to, if price moves up, and selling options creates certain price pulls towards those strikes. As price pulls towards those strikes, they have to buy index to hedge their short call. Buy underline, buy ES. Or buy some sort of delta to match the increase on a later strike. Usually they're going to buy ES. But we don't need to necessarily care what, we just care that they have to balance their book, not necessarily how, but that can matter at certain times. Yeah, if you're not looking at anything like that, and most people aren't going to have to get in. Again, you don't have to go so deep down the rabbit hole. You can get delayed data for free on SPX and create a naive surface. All right. I just told that's what spot gamma does. That's all it is. It's they use real-time data with very basic formulas to get a gamma surface. It will take you like 15 minutes to do that in Excel. There's your hero indicator. But it's an extremely naive assumption that markets just move off gamma, because gamma doesn't matter until certain other Greeks, Vanna, come into play. It might not matter at all, gamma, and if there's no Vanna impact. But you can create a naive surface and use the right Greeks. And I don't know why. I do know why. Squeeze Lemon, the Lemons dude, and Squeeze Metrics and Spot Gamma. They during a time where nobody really knew about this stuff, and gamma squeezes became a more regular occurrence. They kind of blew up, and now everyone thinks. If I ever see someone just talking about gamma, I know they have no clue what they're talking about. I mean, it's so inconsistent, and none of them, they have to have never done a back test on whatever result they think is important, because it's not. Gamma by itself is, it's very hard. You can't quantify the impact at all. Like you can only know as it's happening that it's happening if it's like a gamma squeeze, and even then it could just stop on a dime, because there might not be anything actually. When they think it's a gamma squeeze, it may just be a squeeze between two strikes, and then it's done. A real gamma squeeze occurs when it's like a vicious cycle, and we had a huge amount of gamma squeezes like 2 years ago, and now we have barely seen any. Like, the dealers don't want to be caught off sides. They did not enjoy GME. They made a lot of money if they traded it right, but I'm sure some people got in a lot of trouble. I know they got in a lot of trouble. That's how a gamma squeeze happens. It's everyone being from a dealer's perspective, they're all off sides. and they all have to come in at the same time and hedge, and then everyone has to come in and buy, and then it spikes up, and now they have to all come in and buy again and hedge more. It's like a cycle. It's like a feedback loop. Hold on, sell. I just sold. Hold on, sell. I exit. Trim. Sorry, trim. Google. 0.83, 2.5x, 2x remaining. What do you mean? Certain Greeks have a higher impact at certain times in the cycle. Well, yeah, there's times where the market's being, there's a massive amount of charm. Charm could be more important than Vanna. Vanna could be the driving force, and charm could be non-existent, creating there's times like that is what you need to look at. And there's time, it's like that happens intraday, that happens within a OPEC cycle. That's what you need to be able to ascertain to get anything that's consistently giving you. And there's tons of times where I'm like, I may see something and it's not happening because I do not have 100% a complete model. Like, I have enough to see that works, that has an edge majority of the time. It's right more than it's wrong, but there are times, more often than not, it seems to be, around this time of year where I get reads a lot early, a lot more. A lot sooner than when they actually end up hitting the market. And that's also due to macro flows too, I think, that like all these events with the dollar, with the yen, everything that's happening on a macro level creates new macro positioning, and those macro flows can become so large that they're larger than what we're seeing from the dealer complex. And when that happens, the work I see it's not meaningless. It's just the impact and the predictive part of it loses a lot of edge. Like if you've seen a lot of instances over the past month where it's been like perfect sometimes, and then sometimes it's like it just flips later, and I don't see it until as we're involved in the move, because those flows are not from dealer flows. It's from a different something I can't quantify, at least for me. I'm sure there is a way to quantify it. I know Sem's talked about it. I don't have a way to quantify it, but there are definitely times when certain windows where you do expect to have a gamma squeeze. Like, there are certain times where you want to be long, 0.2 deltas expiring in a day, and you don't want to sell them right away because it's going to be a gamma squeeze. And if you've been in the group, you've seen me mention those times, and it isn't often, but those trend up moves, those gamma moves, are predictable when you are looking at what's expiring in that day and what the prices are for options going into that day. And it's really cheap, and you expect us to get to a part of the surface where those options aren't that cheap, but there's a ton of positioning open on them. And if we get to that part, it starts to make that feedback loop. If we can see that dealers aren't really prepared as much as they should be for that move, and that'll create the gamma moves on the short frames. It also depends on actual positioning too. You can't just assume. No, it's not. By no means is it a constant. Like, in this window, this happens. It's a very dynamic situation, and volatility is always changing in terms of that positioning too. So when you're modeling volatility, you're trying to model or predict where volatility will be. Like I'm trying to predict price movements on an index or on an equity, but then I have to model volatility separately and see where do I think volatility will be if price were to move here, because that will change where price will move inevitably. Yeah, I feel like we're getting. I don't know what knowledge level a lot of people in here have, and I 100% I'm gonna put out some really intro to option stuff fairly soon and talk. I want to really get into how options at least are priced. Like you guys need to know how. You need to understand how options are priced before you can trade options, because you have no idea like where or why these things are moving how they are if you don't understand how options are priced. And I'd venture to say majority of people aren't trading them the right way. I trade straight delta. That's usually not the right way to approach option trading as a beginner. As a beginner, you want to find something you can consistently do and find success. And that's probably not going to be buying straight delta options. It's probably going to be selling scenarios that have a positive EV. You take a sample of trades from your paper trading, hopefully, and you see what trades have positive EV, and you can not think about it. You can take that trade when it has that criteria every time without ever looking at the chart most of the time, and just build an edge or strategy over in a way that's a lot easier to consistently replicate. You could just trade off the 1 to 2 standard deviations of an intraday range, and then sell the premium on the whatever direction we're going if it's reached some criteria that you specify. And I don't think you understand how easy your day would be. You don't have to do barely anything. You might not trade all the time, but I guarantee you you're not gonna have a really good win rate and you're not gonna win small on your wins if you are trading the options correctly. Looks like we just got a spike. $135 strike Google. 136 strike is the magnet. Currently, that's what we're trading. We took this from about 0.2 delta. I'm going to try to get more off at about 0.5. We're testing 4250. Yeah, this is why TA sucks. Like there's TA theory I use. It doesn't suck. It just has you have to take everything with this grain of salt. Like if I'm not looking at anything technically speaking, I'm probably holding. Hold on, let me just focus up real quick because we could tag and reject here. A trim 2x 140 on SPX. Trim SPX 4275 call 2x 140. Marginal new high right here. Trim SQQ 0.56 3.5x. This is gonna be hold on. We got 4240 flow. This is gonna be make or break for the day. It's gonna be make or break here, or we could get into what is okay, it's 42.57. If we get above these two zones, we're ramping, and some of these scenarios are in play. We have to trim here because this could be it. This might be a good time to create strangle, pure bet on ball. I full exit. Did I get filled? No, I didn't get filled. Hold on. Give it a second. Never mind. I'm not exiting Google yet. I'm gonna give it a second. You see on a 2-point move, the 361 calls drop a nickel. That's why you had, like, if you're trading something like that and it's like money you can't lose, you have to understand how they're gonna trade. Like, if you don't know how fast that's gonna move, the second you're wrong from an IV spike like that, you're gonna get fucked every time on straight delta, and probably sit there and wait for it to get back there, and have no real inclination or rationale why it's gonna get back there. Right here, by the way, guys, it's looking like we are going to make a push, a peak above 4250. Again, this is the zone where it could become more problematic, and could very easily turn into the intraday top. But if we hurdle it, so when I trade, I'm looking for there's a million ways a path can unfold. We are attempting to model the distribution and ascertain which path has the highest chance of occurring. And it's never going to be one path. It's multiple scenarios. When multiple scenarios converge at one spot, which was 4250 today, and again on that dip, it was a retest of 4250, we can trade for that path. From here, there's a lot more doors that can open. That's why I trim in these spots, and then I wait to see if it's going to be the larger move prior to exiting my full position. Google should get the 136. That's where I definitely would get down to a runner position. So I'll take 1x at 136 ideally, and then 0.5x or 1x in case it hits the larger squeeze. I think you're probably gonna, if that 1x is like $1.50 or something, or 40, and you don't want to lose $1,400, you should probably take the entire trade back. But if you're gonna get FOMO, if the thing runs up a couple bucks, then keep a runner on to some degree. I'm looking to get, whenever I'm trading short-term contracts, the first thing I'm looking to do is take my risk out of the trade, and have room to play for whatever move I'm looking for, or take the entire trade back if the target wasn't. I'm always looking for 2-to-1 on my risk minimum, and if I'm taking a shorter term trade, it's not for 2-to-1. It's for like 2 to 3, 400% plus. Google. QQQ's over 100% here. Take half off in a second. Filled on a fourth. Trim QQQ 361 call 0.19 0.5x. I have 15x remaining. 5x, sorry. I have 15x remaining. Trim 5x. I'm in 200 cons on those. Well, no, I'm in 150 now. I'm posting risk off on Twitter. I'm not risk off yet. I have some more to sell before I'm risk off, but I don't feel like updating Twitter a million times a day. And I don't want anyone getting fucked. Take your risk off. Pretty close to risk off. I'm not there yet though. Like you don't have, like that's the value out of the group. Like you don't have to see or understand everything I'm doing, and I'm not offering that. I'm not offering you a way to understand and build your own model. But in the context of whatever you're trading, knowing what is moving markets pretty much every day, aside from maybe some instances with macro, is a huge value add to, no matter if you even trade options. Like if you could trade common stock and just want to know when you need to hedge, which is a lot of people in the group. We're peaking. We peaked above. I mentioned a peak above 4250. We're in this zone. This is the make or break time. It's gonna be hard to get. If we're in the volatility crunch and we're gonna see more buyback from what's on the back end of the book, it's kind of a toss up for me here if we're gonna get through. I do lean we're gonna get through, but I want to be risk off on the plays I can take my risk off on. This was the higher confidence read getting here. We've gotten here. This was target. From here, there's a lot more ways this can shape up than just a squeeze. And if it's not a squeeze, we want to be in puts because it's not going to be a small reversal probably. I don't want anyone getting trigger happy either. You have time. I believe I feel like I have time to at least watch this play out with the trims I have. There's still a path where you want to hold these out of the money calls because they're going to pay exponentially. Just take risk back and then see if we can hurdle this zone. And then you just sit back and relax until like 3:30. I don't think it's going to be that straightforward today. Yeah, Dots. I really like it too, honestly. I mean, I'm sitting here all day anyway. It's just when those days when I'm like, we're gonna go on live soon, I just end up like, I just gotta pull a trigger because It's not hard for me to like explain what I'm seeing at all. It's really like second nature to me, but it's hard for me to convince myself that I have time to hop on sometimes when I'm just like glued watching all this shit. I'll sit here like stoically for fucking 8 hours straight and not even make a sound. The swap for 4350 is looking a lot better today. I have really high hopes for that spread. Not gonna lie. Shouldn't have high hopes with any trade, but it's for what I'm seeing. It's my favorite. It fits the script perfectly. It might fit the script perfectly depending on how this next day or two shape up. And even if it doesn't fit it perfectly, I still think it'll work into next week and have that 4350 call move beyond whatever premium it's down from the vig in between the front and the back end. Just so you understand like why you would want to trade something like that in a period like this. I didn't see us getting over 4350 this week. Ideally we tested 4350 on Monday, and I think we were going to until Bank of Japan, the BOJ news came out. My ideal script was 4350 in the beginning of the week, final decline into Wednesday, possibly Thursday morning. That's why I got a little like, I guess I made some impulsive trades yesterday morning thinking that we would get the move to 4300 or 4320 and then move into the decline. And we went from what looked solid into JOLTS data, and everything just flipped and kind of accelerated into that down move. And I should have waited. I definitely should have waited. But for the outcome on the upside, it was severely underpriced. It would have been like 400 or 500% if we got even to like 43, 10 or 20. And that's all I'm looking for. Like I'm not, and that's not all of my trading either. There are times where I'm just trading like weeklies, and I don't want to be bothered with the intraday moves because my edge is that we'll get somewhere, but I don't know if it's going to be today, tomorrow, next day. It's just that I want to add into this zone because the likelihood we get here is like that's the edge I see that's clear. So it really depends on the period. And overall, we've taken I think every entry on trades this week has been great, but I haven't taken money out. Like I've been looking for these bigger moves, and I'm red on realize this week, but it's completely like I could have traded it and managed it a lot better. The reads and the entries weren't the problem. It was more so letting trades turn and putting myself. I just had too much open when these turns hit, and it was like, fuck, we're already here. Like it's not even worth selling because I still see as a higher chance in the market's pricing, and it was just bad management. But the entries were solid, and I should have been more patient. I usually wait at least the first 30 minutes before entering anything, but yesterday morning there are situations where you can have a gamma move. We could have had a gamma move yesterday. Yesterday morning I think we were just about to enter it, and then 10 a.m. hit, JOLTS data, and fuck, it just ripped back down. And I even explain, I'll always explain, like when I know there's uncertainty, I'm like, there's 10 a.m. data going out. If you're not prepared to see your options, go from what are up like 50%, 70% here, go to zero, then get out now. But I know it's tough when you're seeing things go up and the scenario I'm eyeing up to realize the only thing you should think about in every trade you enter is what happens if everything I think is wrong and it goes the complete opposite way the second I enter it. What are you okay with that trade or your size or how you're positioned for it? Because if you're not, then you shouldn't trade it. But most people are think about how much money I'm going to make if this event comes true and all my dreams are going to come true and what color Lambo I'm going to buy, and they don't think about the only thing you think about is if I enter this trade right here, I'm going to go in with the assumption that it's going to immediately reverse and go the other direction. Am I going to get fucked more doing this one, or should I position in a way that will fuck me less and my risk and reward is tighter if I do it this way? Like, if you're buying out of the money calls when things are moving in that direction, you are the sucker majority of the time. Unless you get into those gamma squeezes, you're usually the best time to buy out of the money calls is not when it's moving in that direction. It depends what your time frame is. On a shorter frame, unless you're scalping it, like you're in and you're out, you're going to make more money trading at the money. Scalping out of the money calls is extremely hard to do, and it's unprofitable. You're not going to make money over the long run unless it chunks up like $2 out of nowhere. You want to scalp at the money or in the money calls. You want as close to a 1 delta as you can. You're scalping. You're trying to get a synthetic long. You're better off scalping credits on out of the money puts if you think it's going to go up, because those are going to it depends on the XP. If it's really close to the XP, then yes. But if it's like 4 or 5 days out of the money puts will actually decline a lot slower until they hit the faster part of the theta decay. There's so many variables that no one considers. They just think they can trade. I posted that thing on Twitter last night. I said, someone I posted something. It was the biggest disservice you can do to yourself is trade options before mastering trading with common shares. I could not disagree with this more, because you never need to learn how to trade directionally when you take options. You need to learn how to create a positive expectancy and positive EV. That's how you learn to trade options. You figure out a strategy where you can repeatedly do this trade, which could have nothing to do with direction. You don't need to care about direction. Trading directionally is counterintuitive and majority of the consistent option strategies you're going to find. It's more so about betting on outcomes. There's always going to be a premium for protection. Let's go in with that general idea. There is always, no matter what, going to be a premium to hedge your long risk. The world is long. You buy a house, you buy groceries, everyone in the world is long. You pay for insurance. That insurance comes at a premium. There's always going to be premium to adverse outcomes. There's sometimes going to be a premium, rarely, but in upside outcomes. We saw some of that last year, or 2 years ago. You have to just be able to find where things are mispriced, maybe on a basic level. We're in a high IV percentile. Are we in a high IV percentile for a reason, or can I take advantage of these 0.2, 0.3 deltas that are really expensive into October, but really kind of there's a kink in the curve into November? You know how easy that is to figure out? Like it's like you can do it with the naked eye, and if you wait for certain scenarios, you can probably it's much easier than subjective TA. It's 100% cheaper. Like you can see that. Like it's not subjective. It's a fact. How things are going to change in between, what news changes. IV implied volatility is determined by the demand and the trading that goes on between these and the data. Like what if there's any news? Implied volatility is like the driving force in all options, and in my opinion, if options are the underlying, it's what's driving markets in a lot of ways too. And implied volatility is basically determined by how and by what the pricing is on calls and puts, at the money, out of the money, and that's determined by the demand, what's being traded on them, there's obviously news and different events that could be coming out, but that all factors in, like someone said earlier, like it's already priced in. That's already priced into implied volatility. And then it's traded, and implied volatility moves higher and lower. And that's the driving force that you need to look at. And it's not crazy complicated. I think people just describe it in a way that's hard to conceptualize for people that just understand a binary thing like common stock. In common stock, you have two things you can bet on. It's going to go up or it's going to go down. In options, you can bet on every single possible outcome ever. Like you can bet on it going up Monday, down 230, flat Tuesday, down whipsaw. You can bet on every single one of those outcomes at the same time in one strategy. Every possible, and the summation of all those outcomes is what we are trying to model. That's how we can try to get our edge, pull our edge out. But if you learn how to trade options, you never need to learn how to trade common stock. You don't ever have. Someone could be amazing at trading options, and if you told him he had $1 million to go trade common stock, he could lose all the money faster than as any other degenerate. You don't need one for the other. It's two different. If you're learning how to trade options the right way, you're not probably learning to trade them directionally, because you'll find it's a lot easier. Especially when you're trying to find a consistent strategy, it's much easier to find consistency on things where you can bet on higher odds of things not happening, or even like instead of betting on Apple going up from like 170, I can bet on Apple staying above 169 or 168 to 16. If you took a 168, 169 spread, a $1 spread that's in the money already, it's going to be trading at like 70 cents if there's a couple of days expiration. All it has to do is not go below that, and you get 30 cents. Look, that's higher risk. But if you find that whatever criteria you've formulated, that these stocks in this situation above these, moving averages or this momentum, or in this scenario over, like if you did that over like a 3-month window where IV's declining and you want to get calls, you're going to probably have a really high hit rate and be able to make decent money. You're not going to, a lot of those strategies are not going to return what I look to. I look for convexity, which is that there is not a linear payout to buying a call or a put. There's a linear payout to buying Apple stock. There's a convexity or a curve that ramps up and has slower parts and then ramps to an options payout, meaning not all dollars are created equal. Some dollars pay you exponentially more. That's how I trade. Is not easy for someone just learning how to trade. It's how you're going to mostly learn from education groups that are available. I wouldn't even call them education groups, from the guys shilling snake oil. That's how you're probably going to learn how to trade, and they're going to teach you terrible habits, because they don't know. How I trade is not it's not beginner friendly unless you're really strict on your risk parameters. It's really easy to see, like I see a lot of the time, like I'll have weeks, like multiple weeks in a row, where I'm hitting on these 0.8 delta, like these 8-cent contracts and everything in between. And a newer trader's like, this works, it's always going to work, it's never going to lose. And they just keep going and going and going, and they've made a lot of money, and they're riding a high. And then I stop hitting every trade, and they lose some money, and it's more than they wanted to, but they're like, all right, it'll be fine. And then the next week comes, and again, it's not hitting on every cylinder, or they're not able to take every trade because they're in a smaller account, and they start sizing up more on things they think are going to work, even though they don't really know what's going on. And every time after I have what is usually like before mid-August, September, it was probably 8 to 12 weeks of did not losing a trade, like not losing a week, and some weeks not losing a trade. After those periods, every fucking time, someone blows up within like 1 to 2 weeks when I don't consistently hit every trade, because you get used to a payout that's not usual, and expecting returns like that is an easy way to like fuel, I guess, more of that gambler mindset. When this is everything I'm doing, I know it might be a gamble, but I know it might be a gamble, and everything's a gamble, but I know the odds of it occurring might be not probable. It might be lower than 50%. I don't think it's going to occur, but the price it's trading at, which might be not only improbable, like 1% chance on, the Black-Scholes model pricing of options that we see on the market, and I see it's like a 30 or 40%, I'm going to take that trade and do that every time I see a trade like that, even though I know I'm probably going to lose. When I do win and they go 300-400%, I win more when I win, and I lose less when I lose. And that's just one part of my trading. There's so many ways to approach mispricings beyond 0DT, and I really am thinking that I want to get out of like posting the shorter frame stuff. I like doing it though. Like I love trading. I love action. Like I don't like waiting to like betting on the outcome that's never going to occur. I love convexity. I love long vol strategies. My personality is not, I just don't like selling vol as much, and I probably should get into it more. I need to work it into my system more, instead of like when there's periods of volatility compression, I usually sit there all day and wait for us to hit an edge, and then I'll scalp or trade for like a 10-point move or 15-point move. I need to start, that's something I had talked about multiple times this year. I need to start just taking advantage of those periods and selling straddles and buying straddles later on. But getting off point, my point being, trading straight delta before you understand probabilities and the odds of those being right, and where they're priced, and some way to quantify your expectations, you're not going to be able to consistently make money, at least on a short frame. It's really hard. Like it's just extremely difficult. You're better off trading common stock if you want to trade directionally. I'm sure there's some outliers. I'm sure there's some people that understand leverage and don't use it as a tool for their destruction, instead of using it in an advantageous way. There's many ways to use, and you should be using options to reduce and mitigate your risk, or create a way for you to trade an outcome without having to risk that much. You should never be buying like $10, $20 contracts unless it's a multi-leg strategy. Buying contracts that expensive, like over 0.7 delta, is not convex. You're not, unless you're trying to make a synthetic long, buying that on like a 1 to 2 day frame is crazy. Like you should never do that. Go out in time, at least. There's so many better ways. Every way to trade it can be expressed better than a binary 1 delta going up or down. You never need to learn how to trade common stock to trade options, because the right way to trade options depends on a lot of things. But if you're newer to trading, the right way for consistent strategy is most likely not going to be buying straight delta contracts. So if you think you need to learn how to trade directionally with a TA chart to trade options, you just don't understand how to trade options. Like no one that there's so many guys I used to work with that could never trade direction in a million years. They thought I was fucking nuts. They thought it was impossible to even trade like I was doing, and at that time I was trading like a fucking maniac too. Like my P&Ls were insane. The amount of money I was able to make and the amount of money I was able to lose in such short periods of time. Even my commissions, I paid when I first came into the prop shop, the first thing they said is you paid $100K in commission in 2 months. What the fuck are you doing? Like, I would just go into 1,000 contracts and be like, I don't like it anymore. Out of that. Like a penny later, I didn't even realize commissions were like, I was like, if I make money, it'll be fine. And I had no idea I was paying that much in commission until they mentioned it, because they check your statements, they check your audits. BD, are there any tech analysis tools that you use and you do believe in? I'm not sure how you're joining us, MSL. These are all levels based off dealer positioning. So everything you get on the chart is lagging. These are the dealer positioning that you can ascertain where it's at, where there's buyers and sellers. It's all prior. So like over here, we had this zone yesterday down here, and then it was going to come back up here. It's not always perfect, but yeah, I do use TA. I use traditional. I post TA every morning. I think TA fits into my checklist, and it helps me more times than it hurts me, and it does hurt me sometimes. Today I got out of my ES long because I was waiting for a marginal low. I use TA theories. I use certain things to help me ask. The only TA that I think you need to incorporate, no matter what you're trading, is momentum. Momentum is a factor in any sophisticated trading strategy. No matter if it's like the smartest quants in the world, they have something, not RSI, but they have something to track momentum of stock price. Momentum is, I think you can trade with just momentum, to be honest. Momentum and VWAP, you could probably just trade. I think technical analysis, it's really, momentum isn't subjective. Momentum is the momentum. It's not something you can say, I see this guy sees this. It is not subjective. Everything else, yeah. So when you're coming into highs, the reason you get non-confirms is because as you're making new highs, so we're getting, let's look here. Momentum's making highs. That means there's buyers on the highs. We're buying into these highs. That is, if price and momentum peak, you expect that trend to continue. And this price is not done being traded. That's why when I can overlay that with my model, and I know that we have support at 4220, 25, we're coming back down. And this entire decline, I'm never thinking puts. I'm like, we confirm momentum, positive flows. We're going to trade back up. We could come lower, but we're going to trade back up. The price is not done. Momentum is not turned to a degree that you can say this is nulled. And as we come into these lows and it's fractile. It happens on multiple time frames. So then we come to a smaller time frame as we come into these lows and start making marginal new lows where, look, this is 27.2. See, look, this low prior was 27.2 RSI. That's the momentum in the low. It made a new low with momentum at a trough. So you expect price to move lower. That's why I said in the group, expect the move below 49.50 to be the one we hammer. And in the context, I'm using this also in the context of flows, but without even that context, we make a new low. The RSI is higher, 28.8. That means there were less sellers on this low as we came into it than the prior low. Momentum is decreasing from this low to this low, and we look, that's a marginal new low, non-confirmation, and that creates, then we go to higher frames. We know the trend is still up. We're expecting higher. You buy that. Maybe you put a stop really tight below these non-confirms, because it can be a series of non-confirms. Overall, we know it's going to come back up. And I'm using, like when we were over here, I'm like, this is right at 42.20. So it's all like a confluence of whatever reads you're using to analyze the market. But at 42.20, I'm like, I'm stopped out right below if we get below. And that's right into a non-confirm. Perfect. We have a trade we'll take. And that helps you ascertain when a move is cooling off or something you want to maybe take profit on as it comes into a high, trim and then look to reload that trim later on. But this is fractile. It's fractal, like on an hourly, like a confirmation on an hourly, like down here. Look, we confirmed a low on Wednesday. We didn't see that price again until this week on Tuesday. So it takes time to like burn the momentum and like churn in this process. Like everything in my opinion gets related back to options. Like puts got probably extremely expensive here last Wednesday. We were probably coming off the back of a down day. And we're going to go the opposite way for short term, and then we retrace that move later on. It's fractal on the daily. The daily is one. This is one of the prior to us making new lows. Yesterday night, we made a confirmed low on the daily yesterday. After confirmed lows, at some point, unless the market is set up for a crash, you're going to expect a non-confirm low. And all you need is price to close higher or more buyers and sellers on these lows, move price up. RSI is 33 today. It's higher momentum. And price made a new low. That is divergence, not confirmed low, depending on where we close today. So I strongly believe no matter what you're trading, you need to be looking at momentum. It affects more things. It affects everything. The momentum of implied volatility, the momentum of volatility, the rate of change of volatility. There's so many factors in every sophisticated model that you 100% need momentum in any analysis you're doing, unless it's fundamental. Sounds like you're at least looking for holding for confirmation up or down. And I always take like the shorter frames. It's helpful for intraday trading. Like I know that we have positive flows today, but I know it's in a zone and I'm not sure where that spot's going to turn. So like I can come in here and use some stuff like this, and it works more times than it doesn't. That it's imperfect, but it's not it works within my system, because a lot of the times I can pinpoint it. It's only occasionally I have to be like, this zone is like somewhere within this 20-point zone is going to be the turn. I'm not sure where. I could wait and see how it shapes up, and I'll have a better idea in like an hour or so, or by lunchtime, where things are going to start, where the dealer is positioned on an intraday frame. Or I could come in here and know what I don't know that part, and trade non-confirms on shorter frames. And majority of the time you won't see something like this. Like this was I wrong about this? Oh no, was I 28? No, yeah, this was a confirmed low on a 5-minute, but I don't know. It's an imperfect thing. I think it's like trading anything that's not algorithmic is a confidence game. You're trying to build confidence, enough confidence to take the trade. Then you have to build enough confidence through what you're seeing post execution to stay in the trade. And all of that has to be, you can't be figuring out what those things that are going to create confidence for you are as the trade is already happening. You have to know before the trade starts, how do I build confidence? What is my checklist? What things do I like to see or need to see to continue to have confidence? If you don't know what those things are, you're just fucking throwing darts every day at a casino. And using someone else's work isn't an edge. All right, let me watch markets for a second. Google still looks like it has another high. Where are the Qs trading? 359. Yeah, we could. That where's Yeah, we're right about to hit. So look, I mentioned 57 earlier. Our high in this box, the top of this box is 57. High of the day right now is 4257 SPX. So this is the part of the move where more doors can open if we do not sustain. 1 second. If you're looking at just the intraday, you'd be more inclined to think we fail. If you're looking at the weekly positioning and what's coming on the back of what this low is that's going to be formed this week is indicating, we're going to continue to rally. That's why there's more paths that this could shape up, how this could shape up now, because I am not sure how much the dealer is going to hedge their book today for something that's expiring in a couple of weeks. I have a good estimate on what they 100% need to do, but that's the part of the model that I'm not. That's where we look for things to converge, like getting to this point and then trimming and trade. We're always not going to know things. We just trade when we do have edge and with what we do know. So if you are up a lot of money and you would not like to see that money, if price went down and you would be sad, take the money back here. That is the best way to approach trading here, especially on a really short frame. If you'd be more sad about price going higher than you would be about losing that money, then you hold your trade. I always, like I said, I'm taking risk off and then looking to hold whatever runner or half size, and if it's like a higher percentage path or higher odds of occurring, I'll hold more size. If it's like 20-30% chance, I'll probably be sitting here like ready to exit instantly if it doesn't occur. Here it's like a toss-up if we're going off intraday. And there's an easy way to keep me in the trade at least. I'm going to wait to see if we break back below 4250 SPX. And if we break back below 4250 SPX, I would give it another 4 or so points if I really wanted to wait for it. There's certain trades I have on that would lose 50% of their value in that period of time. They already are. There's an IV crunch on the 361s. We don't want to see out of the money calls unless we're in a straight squeeze. Those 361s aren't going to really start hitting. They could have gotten into the move earlier. Like I wanted to open them when they were extremely cheap from in regards to like the path we're looking at, but those aren't really going to hit convexity unless the move squeezed right in the morning. And now the only shot they have is by the close. But that's how they will, like if something goes from no value to high value in a short period of time, that's how you get a gamma squeeze. That's how you get the dealer needing to hedge all that entire position that he's barely hedged on by 3 o'clock or 2:30 in a very short period of time. It doesn't need to take form like that. It could happen earlier, but generally speaking, if you're going to get those crazy moves and those lottos that go from that you see these guys posted never had, and they're just posting something that went from like oh, the 4280 calls last 10 minutes went from here to here. That's how that move happened. A move happened where a strike was basically there was no hedges on it for it anymore because it was like there was no value, there was no reason to be hedged, and they needed a reason to be hedged in a really short period of time. When price spikes up and it rejects instantly, you don't really want to be continuing to trade that direction necessarily. This isn't like not a theory or anything, but when price, this is something you can watch for. If price spikes up, or like you see like a 5 to 10 point run really fast like algo move, and we sustain that move and we keep going higher, you should expect that move to continue until you hit something in the dealer's book that's going to stop it. Generally speaking, like every day, no matter what, you should be looking at what the expected move. Even if you're just trading ES, you should know what options, like the SPX options, like a one-day straddle is. That is the expected move for the day. When we hit that point, or one standard deviation, half a standard deviation, one standard deviation above, you don't expect price to continue past that. If you're betting on that, like price continuing going past that, like it's once in a blue moon, and usually that's where you start seeing customers come in and buy like fucking lotto calls that are expensive, and it's exactly like always confluence of things. It's like psychology of the market. That's where price will start mean reverting. It doesn't mean it's going to completely reverse, but it'll probably start chopping or going down, then back up and down a little more. And generally speaking, especially intraday traders, those are the things you always want to keep an eye on: the expected move and one standard deviation, two standard deviations of the range for the day. When we get two standard deviations above the 20-day, generally there's going to be some profit taking. When we get two standard deviations below, you better hope the market's not going to fucking crash if it sustains that, and it usually isn't going to sustain that. The only thing you should be worried about is the market set up for a crash here if we're two standard deviations below and sustaining expanding volatility. I am recording this. Yeah, I have like 10 of these recorded. I'm about to go Andrew Tate style on this shit and just fucking drop like 20 videos that are 5 hours long. Because I have no way of editing it. I cannot sit here, and I tried to, and I'm like, fuck, this is too much. We're linking, we got my guy Anthony here. He's going to help me explain my shit more, because I've sat down to make like educational content. It's not hard for me to do. It's just hard for me to start from the perspective of someone who doesn't understand anything, because I just sit there and like, oh, I didn't explain that, and then I go back, and then I just end up on a fucking rant. Yep, that's the thing. I hope I'm good at explaining it. I should have no reason to be talking to you guys or educating or selling shit if I didn't understand it. Yeah. So yeah, if we don't get this move from current spot back up, you don't want to still be holding the 4275 calls. From 0.55, they're over 100%. I'm probably going to take 2x off here pretty soon if we don't sustain over 4257. I think we're going to get over it. Oh, was that? That's for the 9th. Okay. I'm just going to keep an eye on flows here if you don't hear me talking. Four 250 is getting tested. Yeah. I got a finger on the trigger to exit like all this stuff. All the shorter term trades. I do think we're still going higher, but that's my lean. I'm not gonna fuck around after catching the move. Like all this stuff that I'm putting in here is not like a horizontal line based on where price was before. This stuff is not like I literally went in here and typed or dragged it right to 5.7. That's if you want to get arthritis in your back and study the rabbit hole that is like option pricing, volatility, and find some way to quantify it. That's what you can interpret. That's what the goal is, to be able to interpret and predict price movements based on these reads. And if you don't want to do that, and I don't even know if it was if it was worth it. It's worth it, but it was so much work, and there was plenty of times where we were like a year and a half in and it wasn't working, and we just wasted a fucking year and a half of our lives, almost 2 years of our lives, and we have nothing that works. It's a lot of it'll definitely make you a better trader if you're trading options, but I don't suggest that to anybody. There's people that have an understanding of this. Most of them aren't going to be sharing it, but there's people that do, and just find those guys or find what works for you. You don't need to know any of this shit. You can just find what works for you. You could trade off VWAP, but just get some way of figuring out how you're going to do that every time, no matter what, and what you're going to do in every scenario when you're faced with an adverse reaction. When I went to a prop shop, the only thing they cared about wasn't how I made money. It was, they're like, this isn't, I had to redo my trade plan so many times. They're like, we should be able to trade your strategy instantly. Like, we need to know what you're doing so we can help manage like your risk. It wasn't a prop shop with their own strategy. We all traded our own strategies. They just funded us. This was before the fake prop shops existed. This was like, you had to apply. There was multiple interviews, and you can get access to real money, and you only made like 30% of the money you made, and then you worked your way up to higher amounts. But the only thing they cared about is what I would do in a trade, and that being known when things like weren't every scenario adverse to whatever outcome I'm looking for happened. They said, we need to know what you plan to do, anything bad that happens, and that's pages of work. Like, there's a lot of ways things can go bad over the course of a trade, but you again need to know your time, what time you're going to be in this trade, what can happen between that time that's bad, and not only what can happen, like how exactly am I going to react every single time, and that's the only time I started being cognizant of like that I had something I wasn't doing, because I wouldn't do that shit. Like, I'd be like, fuck that, I'm stubborn, I'm staying in, and you have like this fucking little voice in the back of your head that's like, you're breaking your rule, like you're not supposed to do that, you're gonna have to deal with a bunch of shit soon. And depending on how stubborn you are, I still did it a ton. I'll still make mistakes, but like I realize that I'm doing that a lot sooner, knowing that I have something that's a framework. Like if I have a framework of what I'm supposed to do, I realize I'm doing something wrong. If you're doing something wrong every day and you don't know you're doing something wrong, it's like the definition of insanity, just doing the same thing over and expecting a different result. And you probably don't even know you're doing something wrong until you fucking actually look at like your trading and all the executions, all the outcomes, and why you did what you did. You don't have to get crazy as far as analysis, but you should have something that you can look at and tweak, just so you can like improve your edge. You have to define your edge. Maybe it's a shitty edge, but you'll never have an edge if you don't have something that you're going to repeatedly do looking for an outcome. You're never going to have one if you just were like, that sounds tricky. Like, you shouldn't be trading money. You shouldn't be trading real money unless you like gambling. And plenty of people like gambling. That's fine. But just know you're gambling. Don't be like, I don't know how, I haven't figured it out yet in 2 years or whatever. There's people that have done this for 30 years that still haven't figured it out, like, and just like gambling and have a lot of money. And they'll have their investments, and then they come to groups and they just fucking gamble. Like, it's mostly doctors, from what I can tell. A lot of doctors love to degenerately gamble. It's crazy. I used to be like in that euphoric state a lot. Like when I was making, I did a ton of work before I made a ton of money. Before I ever traded, I was back testing strategies to figure out how I was going to trade, and I had a ton of success with those strategies, and they back tested amazing, and I had a ton of success, and I never considered if they didn't work. And I would make so much money, I'd be like, I'm the fucking best thing ever. You guys are all idiots. And then I'd just lose ridiculous amounts thinking that it could never be wrong. And I remember, I know how I sounded when I would talk about it. My dad managed money and traded money, and I talked like a fucking idiot probably. I was like, this is the best. You have no idea. You don't know how good this is or whatever, this strategy. And it was really good. We actually traded it together. But I can hear it in people. I talk to members all the time. And there's been a lot of doctors that I'll hear them talking, and they're just so hype. They're so like we just made so much fucking money. This is fucking amazing. I'm like, yeah, but it's not next trade. On to the next. It was a good trade. We still have stuff out. I don't ever want to get excited when things work. I can hit a 500% trade, and I don't want to get excited. I don't get excited. It's not an exciting time. It's just work. Because when you lose money, if you're getting excited about the good times, you're gonna fucking have a terrible weekend if you lose money. I lose money. It's part of the job. It sucks when you're wrong and you lose money. And I make mistakes sometimes, but I hate hearing people get upset about it. That is part of the job. You're going to lose money, and that has to be the same reaction as when you win, or you're gonna fucking hate your life. You're gonna hate trading because you'll never remember the wins. You'll only remember the losses, and you'll put yourself in a position that you're dreaming of what it's like to win, and you're trying to chase that high instead of preparing that every trade you enter is going to lose. An optimist is not a good trader. A pessimist is. That's why I don't like to talk up on social media or whatever. I don't want to talk about how good things are. That's an easy way to fall into the trap of thinking that you're good. You can be good. You don't want to think that if you're trading your own book without an algorithm that's doing everything, you need to constantly keep yourself in check with your system. And there's always going to be times that you deviate from that path. And it's always, for me at least, going to be times after I have won so much, and I think that the next idea is 100% going to win. And you create a situation where, and I realize this sooner now, I had a much, we had a rough time, the last month or so, month and a half ago, I took my first big loss of the year. It's nothing compared to what I'm up for the year, but it's still my first big loss on the August or September OPEX trades. And what was I going to say? Taking, what was that? That came on the back of being right for months straight. If I was 4 years ago, trading, and I had not stopped winning for 3 months, I would have probably lost all my money that month. I was not ever able to trade for a month and not, you should always be able to trade in a way that if you're wrong for an extended period of time, you will be fine. Like, it's not going to affect your trading. And as soon as you start losing, you should instantly size down your trades. Let the trades come to you. You shouldn't stop trading. I think stopping trading is a terrible thing to put as a hurdle, like, because then you'll lose your, in my opinion, you'll lose your confidence. Like, when I would have a bad trading day and I was like, I don't want to come in tomorrow, they're like, you have to come in and trade. Like, we don't care what you trade or how much, you have to come in and trade something. They didn't want you, like, I was younger than everybody, and I was definitely, they were still like kind of trying to make me less of an idiot, so they wanted to keep me into like the rhythm of trading and not being afraid to take risks, because being able to take risks is also an ability like that some people don't possess. I'm fucking ranting again. Thank you, Anthony. MSL said about the momentum. It's just if price peaks and momentum, so like from this low, we are in a new move. Like, as soon as we make a non-confirm and a turn, we're in a new structure. This structure is different from this one, and now we're looking at highs. We have not confirmed a high all day since here. This is divergence, but you have to understand we're in trend. There's certain situations. We're in trend up. We're in a trend up move. We have room. Like, you can't sit here and short the whole time. Because what if this comes up in we're 50 points higher and then it confirms. But you can use like higher frames. We have room to go higher, and we don't want to expect to turn it. Like, a good rule of thumb, a 5-minute 21 EMA, we're going to stay trend up until we break this. This is without looking at flows, anything like that. We're going to stay trend up until we break this. The confirm, non-confirm is divergence. Divergence happens when from a peak, you're making new lows or new highs, and RSI is not making new lows and is not making new highs. That is a non-confirm. It's the same thing as divergence, I guess, but it's like a lot more granular. Like, this is confirmed, this is not confirmed. It's a point. It's just higher. Like, it's not. There were less sellers down here. But this is why, like, I'm kind of still waiting to see what happens here, because we do have non-confirms. Like, we have not confirmed highs. We are in the zone positioning wise where we could possibly cap the day. But if we get through this zone, I don't want to be shorting here yet, because if we get through this zone, we're going to end up confirming these highs. It's just going to be at a much higher price. And we that's like a good thing sometimes too, because we have room to confirm them. But if you're just trading momentum, I'd probably sit here and not trade. Like, I probably wouldn't take anything here. I'd maybe wait for this to break or buy this on support and see if it comes back up. It's just one thing to incorporate. It's not like the end all be all, but there's other ways you can look at momentum in a more quantitative fashion. But this is fine if this is all you're doing. And I also back tested 11 length is the best for these non-confirming confirms. It is default to 14. You want to use 11, not 14 wilders. I guarantee you I could come in and scalp all day with this chart. Not all day. I wouldn't be able to trade as much. I would have to wait a lot more, but I could trade. I think if you're using tools like TA and stuff like this without anything else, you just have to be more patient. It's not impossible. You don't need to trade you don't need to play every hand you see. You just need to wait for the ones that, force you to trade. Like here, if I was trying to enter a trade here, I wouldn't. Like, I see no I would enter a long vol strategy if anything, and I'm ready to exit my positions. The trade was from earlier. Like I don't see a trade near term from here, but I expect higher prices. I expect everyone's trying to. I see everyone's trying to get short here, and intraday, the dealer's still going to be supportive unless we turn and start. If we, that's what I'm saying. I would be in puts if we turn, because if we turn with all these puts that are open below, if it's fast, it will. We could get right back down to the lows, depending on how fast we move through that. I don't know. Did I explain? Let me see if there's a better chart. So Google 76.2. So Google confirmed highs here. In my position, from my model, I still expect us to test 136, no matter what happens. If I go to the shorter frames, 15, we're unconfirmed highs up here. So there's going to be something that cools off, most likely, prior to this move to test these highs, because it's fractal. It's going to happen on across time frames. Like down here, if you're shorting down here, you want to wait usually until we get some sort of move to cool off, but we do expect price to make a lower low, and it did, and it's a non-confirm, and you can see a ton of these before price actually turns. But if you're going to ever take a long swing, it'd be from a non-confirm, not from here. You if you're following, this theory or using it as some sort of like check on your work, it's just a good way to make sure you're not trying. I catch knives. Like I will catch knives, and I have success doing it. But if you're not able to ascertain turn, like you're gonna make the most money in options trading straight delta if you catch turns from intraday moves. Like I am not upset at all if we turn and break, because puts that are cheap now could not be so cheap later in the day. If you're trading straight delta and just reacting to moves, you're generally going to be reacting as prices already increased, and you're not getting a good deal. If you're catching moves before they happen on a turn, you're going to lose less if you're wrong into certain spots, and you got to just have some rules and be quick. But if you're right and you catch a turn from a pivot low to a high, you can make exponential amounts of money on straight delta. If you're not even thinking about that, you should not be trading options. Like you just have to not be trading anything probably out of the money, or it can get so complicated, but it's so simple to learn the basics. And I can't, everyone I see trading options, especially these people that tell you they're experts and educators, they are not consistently using them in a way that's like advantageous. I'm not always doing that either. And by definition, what I'm trading, how I'm trading, I'm going to get minus 100%, but I'm not going to be getting minus 100% on any trades I wasn't going into it thinking that that was the likely outcome. If I'm trading 0 DTE, 1 DTE, I expect that money to be gone. Unless I say it's intraday and it's here and this is my stop, I expect that money to be gone. But if you are trying to make a strategy out of that, you have to have like airtight rules, because you're going to end up losing more than you win. Taking an option contract to like 1 to 200% plus is extremely difficult without some sophisticated or some edge that you can repeat, because you're not going to guess that right that many times. Guess correctly that many times. Time is a very hard variable to ascertain because you can time a move buying common, but timing how much volatility is going to move and where's the right strike to buy in terms of that is something else entirely. All right, we're testing below 50. If we get below any more 47, I'm probably going to be taking my exits. I still lean that we're going higher. I will say that. But the path to the downside will definitely have much higher probability if we sustain a break of 4247 through prior to 230. So we're testing below this. If you're just looking at something like this, you'd wait for a 5 to 10 minute close below. See, all this stuff, if you're just using this, it's all lagging. You have to wait for things to confirm, which is fine. Like if you want to trade like that, but I suggest you don't trade options unless you have a really airtight system. Price unable to sustain below 4247, which we mentioned prior. And if you're just using this, you just want to see if it sustains below. This basically, it can get below, like you see, get below. This didn't really abide by it that well here, but generally speaking, in a intraday trend, it's going to reverse when you sustain break here. And if you're in a trend day, you use this line to get involved. Like you can buy on the tags and sell above and shit like that. I don't really trade depending on the setup, I don't really trade in and out like that. Scalping like a really tight range for me is just like grunt work. And you can fuck it up in like 2 seconds. You can fuck up like a full day of scalping. On TradingView, of course, they gotta have basic RSI. It's like the most universal technical indicator. I think even days we don't go live, like this is aimed at members, I got to start giving you guys like a visualization. It's just that this is gonna like change sometimes. Not most of the time. It hasn't changed at all right now. But it will change more times lately than not. It's been changing intraday, but it's definitely helpful to like look at something and visualize what I'm explaining. You could easily just take what I'm writing out in the group too and put it in, but I'm sure it's helpful. I do want to add more of those Apple swings before the close. And I don't know if I answered your question, whoever asked that, the MSL. Did that answer your question? Like, if price made a new low and RSI made a new low, you expect that trend to continue, but the larger frames are more important than, an intraday frame like this. Like, there's higher confidence on, like, intermediate frames, hour, 4 hour, daily. it for me, if I was coming to learn something like this from your perspective, like your guys' perspective, I would just be using this to stay in moves or manage winners better. Or if I'm going to play turns, make sure that we have some sort of decreasing momentum into highs or lows before I even think about playing the other side of the action. And a great way that's easy is like when this is a confirmed high, you can just know that whatever this is, you don't want to be a seller. And like it's just really great supporting evidence and guardrails for getting in, supporting evidence for like staying in trades, or guardrails for taking the wrong trades. Like if you're thinking puts off this, it may work. There's going to be times when it confirms and puts work, but if you backtest that and try to test like one time frame, 15-minute confirms after a low on a turn, like you have to put in the right variables. But I tried to make like an indicator with this. I still gotta. It's not hard. I gotta find someone who can code in like TradingView and do something like that. But it's just a helpful like check on whether or not you should even be thinking about like a reversal, because I guarantee you, and I saw it. There's people coming in on this move. It was barely any customers that were making like an impact, but there's customers coming in. When I say customer, I'm talking about non-dealer activity. Like we are customer activity came in here and was buying puts. I forgot to save this again. And I was talking about making something like easier. There's a ton of indicators you can use that are definitely helpful. Beyond like the buy and sell signal shit that people offer, which is complete bullshit. It's all just a confidence game when you're doing stuff like this. Like, dude, is there enough confluence of things that I have confidence? So another thing to note, when IV's decreasing after a move lower, it creates supporting flows. Oh, I meant to save this. So price made a new low. It was not confirmed, I remember this time. IV was not expanding anymore. IV in its simplest form was not moving higher. As IV began its decline, this creates that feedback loop that we'll see on the upside. It's a pretty violent move higher. Doesn't really stop much. Till you get here. Where did IV first spike? As soon as we started the decline. Nah, it's nothing. Boom. Starts increasing here finally. Like that's why all over here, anyone looking at vols, like this is like nothing to worry about. Buy this up. I thought that could have been, there's a chance that was the low. We traded into the highs. I was adding like over here. I definitely could have traded this move better in hindsight, but I had plenty of great trades throughout the time too, but I got killed on theta on some of the swings. But I had a plan the entire time to average into these trades. I have plenty of time, and I am in no way, shape, or form. I'm not worried, but I think it's sort of binary. If we're not crashing, we're going to rip. And I don't think we're crashing. There's not a case out of here that I see with positioning that it just goes sideways, because when volatility declines from here, like it did from here, it causes a rally. And not only will it cause a rally here, there's a ton of Q4 positioning and elevated skew that will accentuate that and make this a much longer, drawn out rally than just what we saw on the prior low. Again, some put strategies pulled up. This is about to turn. Stays here. Time is it? 1:15. Hold on 1 second. So I don't want to say turn from what I'm looking at. It's not. I don't see any way we can get bearish today, to be honest. I think they're not going to pay out these calls on the end of the distribution, and that distribution shrinking on the upside. Next 5-15 minutes, I'm going to take the same days off. If we don't get something going, I should probably just be rolling them out now, but I don't want to roll them out. I don't want to add more risk at this point, because if we don't rip, we're going to chop. I shouldn't even say chop. If we don't rip, we might come down, but we're probably going to come back to this. See, this is hard for you guys to see if you're not looking at positioning, but this zone that was outlined earlier today, God, I hate how laggy my shit gets when I'm streaming. Fuck, hold on. This zone, even if we come back down and do whatever in between, price should come back here by the end of the day. So it's not like something you want to play with puts. It's something you might want to take a credit. I wouldn't even take a credit here, because the risk is, you can take a credit same. So there's a tons of ways to take advantage of these reads that I'm providing. You could take a credit. So I'm sorry to say, like, the odds of us ripping, it's pretty much half and half between ripping and chopping in this zone and not achieving much more upside. I do lean that by the close we'll get above this and have a move higher. That doesn't mean we don't get higher and come back down here either, but I do lean we'll have a move higher. You don't want to play puts. We could go lower, but we should come back here. So the risk is continuation up, but unsustained move down. So you could trade really cheap out of the money puts here, same day, and take a credit on tomorrow's. And the vol will, depending on how cheap you get, this is, again, you have to understand some dynamics of option pricing. If the puts you're buying same day are still pretty valuable, that doesn't make sense, because these are going to decrease more than the back end. But you could also trade a short straddle around here, and with the expectation that this zone isn't going to be as important into Friday. You could be short 4250 straddle and be long 4250 for Friday. You're only paying the debit in between, no matter what happens today, unless we go up like you're going to lose your debit. Like if you on that strategy, your risk is really you have barely any risk beyond your debit of adverse reaction. But if nothing happens today, and 4350s that are trading, what are they trading at here? Trading at like $15 here. If they expire close to worthless, you'll make money just between these expiring close to nothing and owning Fridays, and then you can choose whether or not you want to hold the back end of it. But it's I love doing trades like that. I'm starting to post them more again because I would take trades like that sometimes, and like I used to post some. They need to be like delta hedge in certain ones that are a bit more complicated, and I'm not going to sit here and tell you how to delta hedge your book. It can get a bit more complicated than that. But those are the trades you can really take size on something in a short frame because you're not in that much risk. Like your risk is not being exactly correct and losing a little bit of premium. But if you're right across time series, you might risk a couple bucks, but you can make 300 sometimes, depending on how you're organizing it. Like I've had FOMC meetings where I've bet on Wednesday there being a spike up, and I'm long like a 4,100, 4,300 call spread. And then Friday, I'm the inverse of that, and I'm expecting price to come all the way back down. The net debit or whatever from that spread, I think I got in at like 20 cents before. I've gotten in at like, because I put it, like sometimes the moves I've seen are so ridiculous. Like it's like 2-3% of the money like in a couple hours or something like that. The difference between those two is sometimes a nickel. It could be like $3 if you did it on like a Monday. But if I'm right and we spiked up here, I could take the trade off at Wednesday's close and make, $5 to $8. But if I'm right across both time series, that trade I ended up closing some for like $160 from my highest buy was like 3 something, my lowest buy was like 35 cents or something. And I traded it like shit. I traded most of it into here and didn't capture, what I did expect to happen, which was a complete reversal. But if you're right across different times, you can really take marginal risk to take those bets. Like it's not the risk. Like if I'm wrong and it goes all the way in some other like down, I'm still short the opposite reaction on Friday. Like I'm not going to lose. There's multiple ways to win. It's a custom one. I give any of my scripts to people that are members of the group if they ask. You can find it online. It's not hard. I can honestly, it's not a big deal. That's not like a one that I care about that much. This is a very basic. You should probably get one for HV too. I forget how you do here. Like if you want this one too, I don't care about. This is just. I found these online years ago. This is not anything I did. You know how to import them, right? You just copy that into your the shared workplace or shared settings or whatever. Alright, take my eyes off for 2 seconds. These fucking same days are down 50% on 2 points. Yeah, that's the risk. Google, I'm probably gonna hang on to. Guys, by the way, if you're in the group, I'm going to a wedding on this weekend. I'm gonna be flying out on Friday. I don't know if I'm flying back on Monday or Sunday yet. I might not be here Monday too. But I'm gonna bring my laptop if that's the case. So yeah, I mean, like, I wouldn't get super bears on this move. Intraday at least. Maybe tomorrow. Like I said, we could still come back down and make new lows into end of week. But my lean is that today was the low. It wasn't really like I would have loved if that happened intraday. Because trading this move from that low intraday and betting on 42.50 from down here, that's how you get paid. So I wouldn't even really mind if we had new lows. Share screen. Oh, I've been streaming the whole time. And the recording going. Okay. Let me get my phone going. Yeah, there's not gonna be that much action. If we pin the close, it's not gonna be too much going on. Around 2:30 here, we should have some buy side action. Hold on, I'm trying to get this set up. There we go. I had no idea how expensive a camera could be. My wife's about to buy like a fucking $1,500 camera. I don't think I want to be seen that clearly while I make this content. That's gonna be, you're gonna see every pore on my face. Alright, I got it going. We're good to go. Alright, what do we get? We got the 4235, I think. We got a little below 4233. We're heading into 230 rebalance. If you're new to everything I talk about, Um, 2:30 p.m. every day, the dealer will rebalance a lot of their deltas depending on what they need to buy or what they need to sell. There's usually going to be an imbalance. Sometimes it matters more than others because, oh shit, it's a test. Okay. All right. That was a test from the national. I don't know if you guys got that too. That was like the government testing some shit. Test from the state. But all right, yeah. So at 2:30 p.m., they were going to rebalance their deltas. They could have a ton to buy. You could expect there to be buy side action if we're trading at a certain price at that time, and it could get absorbed by the market. You don't usually. It depends on the notional. Like it depends how much there is to buy. And they don't have to do it at 2:30. Generally speaking, they will start 2:30 and then finish by the close. There's been plenty of times recently that they've not finished hedging their book until the close. It just makes it harder to predict. But in this situation, I would expect, where are we at? 4240. If we're above 4240 for sure, we should at least get back into that. Let me zoom in on this again. I don't know why I hate that it does this. At least get back into that gray zone I have outlined. I lean that we're going to get up here, but we'll see. Depending on what happens near term. Like, if I wasn't trading after that first move and I took all my positions off, since I still have positions on, I'll see how it plays out. But if I didn't have positions on, I'd be taking like very cheap risk, which it's not. It's like still lower odds of this occurring, but it's kind of a coin flip between staying here and getting up here. But getting up here in an hour and a half, time period, that outcome is, pennies. And I'm not saying you bet the house, but it's, in my opinion, worth the risk if you're looking to trade anything. I'm not particularly keen on this setup near term into the close, besides maybe like an underlying long ES, which is something I probably will do when we get back above this and sustain. Today I definitely didn't watch. I gotta watch my trades closer. I would have held after the first sells. I could have traded my remaining SPX better. I knew I was in those positions, and those positions, if you don't sell them as we go into the highs, you instantly lose like 50% of the value if it goes down a couple ticks. That's what I'm saying. Those out of the money plays, like how I trade some of this stuff, it's not how I always trade, but I'm just trading the mispricing between the outcome I see probable and what the market's pricing in. You could have just traded long, at the money cons and probably done way better, but your risk is higher. I was doing that via long ES, and I would have added back if we made the other low. I'd like to take my higher delta trades, like a long ES is a 1 delta, or if you're trading at the money, closer to the money, I like to take those trades where the risk of me being wrong is really close. My entry is so close to where I'm nulled, where I'm wrong. Especially with the book I have open right now, I'm not trying to like manage all that between and worry about what's happening intraday. I'm more concerned with adding to my swings. Messages. Oh, did my messages get deleted with the scripts? I think we have something that deletes links right now. Did you not see any of those TOS scripts? Shit. if you DM me, I'll send them to you. I think our admin or there's some we're still revamping our Discord. I think he might have changed. We were planning the free section will no longer have free members able to talk. We're still going to come in and have you know, free calls calls in the free section and still give out info in the free section, but as we hopefully scale, it's going to be really hard to. I'm like a narcissist. I will answer everybody's question. So, or if you want to sign up, I'd be more than happy to answer and talk. It's just going to be hard to manage if we have like thousands of people in the free section. I don't know if he changed that already, but you might not be able to talk in the free channel. You can always reach out to me on Twitter and stuff too. I don't ignore really anyone if they're asking something about work or in the context of any of the stuff I talk about. About 6 minutes till the 2:30 rebound. Let's see. Yeah, I'm about to tee up my long ES order. Long 66.75, 5x. No hard stop in yet. Can you guys see my interactive brokers? Or, no, it's just the application. All right, let me put the screens back up. So I gotta hide some account info if you can see my numbers and shit like that. I think you just see the application though. What's up, babe? I'm still on the call.
You want to share a fruit bowl with you?
Yeah. Yeah, soon. Yeah.
I don't know because I think I go marathon. I'm gonna walk with Pablo and then I back.
Sure. Yeah, I'll probably hold this till let me see if there's any options I want to take. I like credits on the SQQ 21 calls. I love every short bias thing on SQQ. I love every short bias trade on UVXY. Yeah, so like if you're just looking at momentum still, you don't need to confirm. Like this was still off the high, this was still the lowest point, and then we made a new low and there was less. But you don't have to think about it like it has to get extreme. Like on this new low, there was less sellers and more buyers. Boom. It reverses. I wasn't really looking at that. I just knew that we were not sustaining below 42.40 into 230 rebalance. But, you know, if I'm not sure about the rebalance, I'd be looking at that and using that to kind of guide my specific, you know, trying to fine tune my entries. But usually right into 2:30 p.m. you usually have some sort of you don't usually have weakness, but there can be some weakness right before the rebalance, and then they'll come in and balance their books and buy. I don't know why that happens sometimes. It's clearly not from people that see that the dealer has to buy, but market loves to lay traps in any way they can and create, as many people on the wrong side as possible. I don't know why that there's AM weakness when we're in positive flows. That always creates a bear trap, but there is. Well, I do know why the positive flows start around that time. It's I don't know why there's always tends to be some negative reaction. It is around 10:30 after peak IV, and you're not realizing that move, and you have all these supported flows under the hood. That initial move is going to have a ton of IV after that first hour, and there is a rebalance at 10:30, and IV is declining, and as soon as they'll sell you the expensive and they'll buy the cheap, and it just turns around that 10:30 window. It's been 11:30 recently a lot of the time this year, or not this year, this last couple months. So yeah, if I'm trading ES and looking at how I'm thinking about it is I'm either holding for the close if I'm just trading the model, or I trim into here if I'm looking at trying to micromanage with my intraday charts. You need help, babe? No, never mind. I would trim into here for partial, or I'd if I'm looking at, like I said, my reads, I'd be looking for the larger move into the close. I think with the expectation that we do get to 42.50 plus and back into this zone, I'm more comfortable holding, especially with the notional I see that we have to buy. So yeah, I'm probably going to hold, but if we reject here and looks like we're coming all the way back down, I'll probably exit my trade and then miss the entire trade up again. Hopefully not. We'll see. No, I was joking about that last part. Let me see. Google's still 134. Trading at 4240, right on that 21 5-minute exponential EMA. 10:04. I like the 10:04 423 calls. Damn, I wish I caught that earlier. I didn't see they got that cheap. I like them when they were at 30 cents. I didn't even see that. Getting over it. Should get back to 42.50. Should get above 42.50. If you're looking at just this, without the context of stuff I'm mentioning for positioning, you'd want to see a 5 to 10 minute, which is 1 to 2 candles close above this, to say that we're sustaining whatever direction above or below that mark. This is like an imperfect thing. It's like some anecdotal thing that I learned. I don't even know where, but it's not anything that's like the crux of my trading strategy. It does help you stay in trend up, and Just nice anecdotal shit for intraday trading. At least I like to look at it. I don't even know I have it on these charts. It's just on there. I do not mean to. It means nothing on these. 15, it can mean something. 15, it abides by for the most part. Let me zoom in here so everyone can see. What was that? 5-point downtick. That's what that was. I don't know what that was, but I got an order teed up. In case I got to sell. I don't think it was anything, but we'll see. Probably another little trap, but I'm not getting caught. I'm not going right on this trade. I'm gonna put actually gonna put my hard stop in at 67. What is this, news or something that I missed? I don't think there was anything. Nope. Those 423 calls came in. I'm in 423 calls at 0.37 2x. Long SPY 423 calls 0.37 2x. Same day lotto. Yeah, I don't know what that 5-point downtick was, but it doesn't change anything I'm looking at. Maybe it's one of these macro whales that have been fucking annoying as hell to deal with trading this week. There's been tons of macro positioning. Yeah, good rule of thumb. I'm sure I mentioned this earlier, but you'd want to, you know, if you're gonna trade it like a lotto, hero or zero, or you put in like a 50% stop and look to take off 100% for half. It depends on the price too. Like if it's like, 5 cents, I might not be trying to take a risk off at 10 cents. It depends on. Majority of the time, I'm always trying to take a risk off for half the trade. And if it's like this late in the day, I just leave the order in so I don't have to think about it or second guess it. There's no reason you're gonna be wondering why you didn't sell majority of the time if you let trades go 100% and you're still watching it with an hour and a half left. Yeah, someone's buying those calls now. The ones that we just got, they're also buying the 357 calls on the Qs. If you want to take credits on puts in this situation like this, that's what I mentioned after the high. Like since we know there's a path that it can still squeeze, we don't see a path where price fails intraday. Great time to trade credit puts. Not my style. Not my style when there's a chance for a squeeze, at least. I was posting some trades in the group yesterday. I think it's a great time to if you look at where point 0.5 delta is, 0.05, like 5 delta, super small. 5 delta for like end of month on SPX, it's like a 3,800 or 3,700 put, which is 500 points out of the money. While a 4,500 call at 5 delta is half the price, and you're taking a credit if we don't get to 3,800. And overall, I think 4,500 by end of month is not at all out of the question. And if anything, you're going to make money from 3,800 not occurring. Plus, any upside, there's going to be a move in premium, especially early on in the next week or two. So you could take a trade from like minus, I think it was like a $4 or $5 credit on some of those, and trade it to plus, any amount of money, $5 to $10. It can it's very margin intensive to sell naked SPX though. You can always buy and spread it on a different strike, but it is margin intensive trading SPX naked. That is partially the reason we got into. It's my personality, like the way I like to trade too. But we couldn't really size up when we were trying to trade the paths that wouldn't occur on SPX without having like tens of millions of dollars. I prefer defined risk. What am I in? 74. I'm actually gonna pull my sell order on SPY. So exit ES 79.0 full holding SPY. I wouldn't be exiting ES if I wasn't holding SPY. And I think we're going higher. I don't think my 4275 calls are dead yet. If we get the squeeze, I would like to sell those ideally for like $5 in a perfect world. If Google makes a new high intraday, I'd be taking profit. You know, we're still good. I know I want to get off. Rivian had a great move from our entry this morning. Didn't really look back, or not entry, our ad. I want to. There's so much I want to do right now, but I gotta chill out a bit so I don't get fucking nuts. I want to short every put and buy every call, but I do want to get on some more of the swing we entered this morning. The starter. I really like that opportunity. I looked at like every really liquid option last night and looked at what I was eyeing up between the chains and the option chains and charts. I absolutely love that play. I'm gonna really fine tune like any ads beyond current book because I want to start just managing these and then adding core as we see opportunities build up on anything beyond this. And there's other ways to play some of these too. You could take like 10 width spreads out of the money for like 20 cents with $10 upside on some of those names. But I'll post more about that in the next day or two, what we're going to do. I'm going to add more of that starter position. I just posted, if you guys enjoyed the call today, would love if you guys could comment, like the post, whatever, retweet, just so the algorithm, I get back in the good favor of the algorithm. Thank you, man. Perfect. Yeah, this is my new partner, Anthony. His background's marketing, something I just don't understand or care to do after trading all day. So we're gonna be yes, yeah. It's hard to find someone who does marketing that understands trading. So it's the exact partnership I've been looking for. So we'll see. There's gonna be a ton of content coming out. He's just gonna he's listening to these calls right now and trying to figure out the best way to kind of guide or tell me what scripts to go off of. No, yeah, knowing that I'm going to talk about these things consistently. Yeah, there's going to be a way for members to come up and talk too. I don't want I only mute I only mute everybody for the most part, so that there's no I don't mute everybody. I mute anyone who has background noise. Um, but you guys are more than welcome to jump in, comment, ask questions, shoot the shit. But we're just getting this set up, getting a feel for it. Yeah, that'd be great. The feedback would be great. Like trading when I are you hopping out, Anthony? I thought no, I was gonna say something like I've seen live calls before, like with a bunch. Well, I've seen live calls from like COVID traders, and there's like 8 people talking, and you don't know what the fuck's going on. Like trading should not be like I don't think you'll ever get on a live call with me. You'll hear me like getting super excited or getting super like fucking out of it for losing a trade or some shit like that. I know when I get tilted and I won't be trading, and it's not often that that happens. It's usually uh, it's pretty much it hasn't happened this year, thank God. But you won't ever hear me really get emotional. Trading should not be like you're sitting here, you're going in and out of plays left and right. Like you have a play, maybe you don't ever get an entry on it, so you have to wait for that trade to play out. Like I don't know. I saw these live calls with these kids, and they're just fucking looking like at 20 different things. I'm looking at a ton of stuff, but I'm not. I'm only telling you guys what is worth telling you. Like there's obviously a million things going on, and you have to be able to interpret data and make decisions. But uh, there's always going to be another trade, and I feel like even if I take a lot of trades one day, like I am sometimes like I make mistakes, but if you're trying to force trades and not waiting for like that setup to come to you, like that spot, like if I don't catch that spot and I'm trying to enter at like 75, but I might get out faster and not really. At least for me, it's just not like it might not be worth it. Like I'm only trying to get trades where it's the risk is so tight. This is like intraday trading. I have a lot of strategies and styles of trading I incorporate within the context of my model. But as far as like intraday trading, I'm trying to enter where I'm wrong quick, so I don't get caught in like yesterday when I posted on Twitter. And I hate posting on Twitter sometimes because I had to have a moment where I'm like, are you want to be right or you want to like not lose art, like be an idiot? And at that same time, like I still had reads to stay long when I stopped out of my ES yesterday, and people are asking me what my stops is, and I really didn't. I was like, I'm going to hold this till, because I know it's going to come back at least. Like if I enter here, I'm getting a terrible exit, and I put my stop in like below the low, and I got hit, and then it came right back. I knew it was going to come back to. I didn't know, but like I thought that my lean, like what I was looking at model-wise, even if we had to make new lows. And I did expect new lows. We were going to come back to the 42.40 first, which got me basically flat. And I stopped out earlier. Like that is some of the downside of like posting on Twitter. I'm better at realizing when I'm like that now, but it is. I'm getting off the beaten path. My point was, you should not be trying to trade intraday. Like I've seen some of these dudes. They're like just in and out like 20 million times. Like there's not that many good opportunities in a day. We've had a lot of trading opportunities recently, but overall, there's if you're trying to grow an account or find consistency to your trading, you're probably not finding more than a couple trades a week. You got to find something that you look for that's like some edge. Maybe you don't even know if it's an edge yet, but you will never know until you start taking trades. Like you can backtest any strategy, then trade it live, and it sucks. especially with options and different variables like time. I wouldn't backtest options per se. It's really hard to backtest a lot of option strategies. It's easier to backtest outcomes based on whatever things you're looking at, and they can all be technical. Like, you can be a technical trader, but you can't trade every day, in my opinion, unless you're just really that good. And there's not many people that are that good in this entire world at technical trading. There's very few people in the world that can technically trade a market every single day and have edge every single day from feeling a market that has so many different variables compared to prior to like 2008. There's so much other things that you can't understand by just looking at a chart or depth of market. Maybe you're that good. There's some people that are that good, but that's like, being the LeBron James of reading a chart, and don't expect to be that person. Expect that there will be some opportunities that anyone can hit a layup on, but they're not going to happen every single day. They're going to happen, especially when you're growing an account. You can't take things overnight. You have to really dial in on like what risk you allow yourself to take, and it should mostly be intraday. If you're taking overnight risk on a small account, you don't have that luxury. And unless you're selling unless you're taking credits, you have no reason to be holding anything beyond intraday. If I was trading it, like, we're gonna do a small account challenge pretty soon once we get up and running with Anthony, and I've given a lot of thought about how I want to do it, because how I'm going to trade it is not like how you should do it when you're trying to learn. I'm not trying to learn how to trade. Like, I know how to trade. So I'm going to full port when I know the risk is really tight in intraday trade. And I'm going to lose like 5 or 10 cents or some portion of the trade, and that'll be my risk, and that'll be in instantly. And if I'm right, I'm going to try to take any trade I take is going to be looking for 200%, 100% minimum. And if it doesn't, and I'm not going to find trades like that every day, trading a small account. If I'm trading a small account, and I might not full port every trade, but if I'm taking those trades and those are the ones I want to look for, and this is only in the beginning, because I think I'm going to start with like a really, really small amount. But it might not be a small amount for some people. I'm still trying to figure out if I want to do it like the right sizing for a small account, but like then you just get stuck in small account hell, and I don't know. In my opinion, it's better just to be really patient and wait for the ops that you can take large size on. But I'm definitely open to suggestions in terms of that too. Like, I could just trade like a quarter of the account. I'm definitely not going to do it like how you should do it if you're learning, like, which is like one contract, never going above like a 250 contract, and if it's a 2K account or something, it's just really tough to trade a small account in general. If you're learning, you want to play it with size that you want to play it with the smallest size possible. Like, you want to play one contract. You don't know what you're doing. If you play more, you're going to just start gambling. But if you have any edge, and growing accounts not that hard if you're taking risk in the right spots where you're wrong instantly, or you're right and you're able to 1x, 2x, 1.5x the account. I wouldn't continue doing that if it got over like 10 or 15K. I'd obviously I would if it was those spots that your risk is tight. Intraday you can take more risk than overnight, obviously, and anything can happen. I could have the perfect analysis, perfect plan, perfect spot, and it was a fun time when Trump was president. I probably lean Republican, but I fucking hated that period of time. He would just be like, fuck China, and then my shit would just go down like 50K, and out of nowhere. Every way I could have gotten fucked by his tweets, I seemed to be on the wrong side of every single one throughout that time period. That was an interesting time, but like anything can happen. Like at any time. So even like having that perfect plan, having the perfect setup, there's obviously more risk taking more sides. I don't suggest you ever do that. If you're trying to figure out how to consistently make money or have an edge, but if you're trading, it's hard. It's hard for me. Like trading like a $2,000 account, I'm just gonna try to make it into like something that isn't that means more to me. Like I don't know. It's not. And it's a terrible way to look at it. And I don't want to instill any bad habits at the same time. But I don't want to. If I'm patient enough, I think those ops are worth taking. Maybe I'll do it like. And again, I'm open to suggestions. I definitely don't want to do like one contract at a time. I'd rather wait for those like gamma moves where you can get into the really cheap contracts and trade them really tight. The SPY, by the way, is trading 100% here. We're approaching 42.50. This will be the first trim target. I already took profit. On ES, not SPY. I took profit on ES, so like I'm not too concerned with holding through the close. I don't have anything else aside from the 4275s open and some of those QQQ left. Trading should not be hard. Like figuring out something that you can trade isn't hard. It's just being disciplined enough to only trade that. And I wasn't, so I had to figure out how the whole fucking thing worked. Or for me, I wanted to learn how like the watch ticked. And doing one thing, like just trading secondaries, is how I started. Wasn't enough for me. I wanted to learn how everything worked. And playing the largest game in the world is very fucking hard if you don't have discipline, at least within the context of your analysis. If you're undisciplined and you're playing the largest game in the world, you're gonna lose all your money. It's just really fucking hard to go against. You're trading in the largest index in the world against the most sophisticated players with the most information and the best systems. You're not supposed to win. It's made to fuck with your psychology. Everything is an uphill battle for you for the most part. And if you're good within technical analysis or whatever analysis you do, I guarantee you, if you're making money, you're not trading every day. You're not trading every wiggle. Unless you're that guy, unless you're like the LeBron James of fucking scalping. It's really hard to do. There's some really easy ways to make money in the market that a lot of people don't think is sexy enough to do. I didn't think was sexy enough to do. I wasn't really interested in working at the hedge fund that was buying the close and selling the open, although they have amazing fucking returns for 20 years. They may not have traded last year, though. They may not have traded once. I don't know. It's not my cup of tea. I like... here's SPY. If we get to, we're about to be 200%. 1 second. Trim. SPY 112. It's going higher, I think. I think my 4275s are going to hit, but I shouldn't be an optimist. We're having pretty solid days though once we go live. I'm extremely superstitious. We might have to go live every day until I have a bad day. Well, no, we were talking about that. I'm down to do like every day, uh, around like after the open. No, no, we're as we wanted to get on Discord so I could go live easily without having to move everybody over, but we don't have anything yet, and there's like I just it's I'm here all day no matter what, so like I just gotta hop on. Once I hop on, it's easy. It's just if I get like stuck in the workflow and start looking at like a ton of different strategies, I'll just forget to hop on and stop. But no, yeah, I definitely enjoy it too. It's pretty. It helps me not do dumb shit and impulsive shit because uh I'm watching it more closely and waiting for like, spots like that. Nah, yeah. Overall, I do want to go live around like 10:30 every day. We'll get on that next week. The free section calls we're gonna do like once a week or once every other week. Depend. The account challenge I do want to do in the free portion or free Twitter when we do that, but we'll figure that out. I think I'm gonna do the account challenge once if I end up being right once we get into the move and I'm fucking loaded to the gills, and I'll just trade some small account for a bit while I hold my core. Yeah, we could definitely get the Rams still. We should test the highs. I don't know if I think we're gonna sustain, but ah shit, my camera's been the wrong way. So intraday positioning leans. This is probably like uh around where we're gonna close in this gray area, this gray box. But if they begin hedging and they can choose to hedge whenever they want until their expirations. They have a mandate to hedge a certain amount. They have a mandate to hedge a certain amount. That's why from down here, I was the amount of notional they need to buy. It's very hard not to get a move like this. We got the move. That's the edge. And now, whether or not they choose to, they're going to need to hedge. It's They don't have to hedge today if they don't want to. This they had to hedge. For the most part, we are now balanced. We can squeeze more though. This is less. I lean that we will, but there's less edge in that outcome. That's where like I'll post a lotto. I'm still holding lottos. I'm holding a runner with risk off. Like I wouldn't let it go below. It wouldn't probably go below 50, so I'm not really worried. I would just sell before the close so they don't give me 1,000 shares of SPY. SPX is cash settled, but I'll probably take this off, the SPY off pretty soon, just because I do have those SPX on that. They were trading 5 cents earlier. They're trading like 25 cents here, but they're still $20 out of the money. If we get the squeeze though, 4280 would be 4275 or 4280 would be the close. Yeah, it depends if we squeeze. It depends if we squeeze on the close. Right now, we're gonna be. If we closed here, we'd be closing in balance by the 42.50, leaving more room for interpretation. Although I would definitely lean. We sustain upside at minimum through Thursday AM, tomorrow AM. Around tomorrow AM, once we see the first hour positioning, is when you'll kind of know. Like, I'll kind of know if we sustain tomorrow's move or weakness looks like we have weakness into positive flows, which I think would be the case if we had downside. It'd be weakness into positive flows. There'd have to be an immense change to the surface for me to think this is going to persist beyond tomorrow or Friday. And I think if we do have any more weakness, it's a fucking gift. New highs. Yeah, SPY is it's at like 500%. I don't go pull my percent thing up. I'm gonna exit, sell. I'm at 144. Exit SPY. 144. Taking the money. Still have SPX 4275 call open. Google's gonna make me have to make a decision. If it makes a new high intraday, I'm fine with taking profit on Google. I think I'm gonna regret it Friday, but you never went broke taking profit. If we make a marginal new high into 136, I gotta take profit. That was my target. That 43.50 swap coming back with a vengeance. Throughout a like 100-point decline, that trade went down like $3 or $4. If we get the squeeze, I hold till close probably on SPX. Maybe last 5 minutes. See, hourly, if you're looking at this and thinking it's all non-confirms, if you're just using this without anything else, I would look at the momentum on the hourly, which has never peaked yet. So when you look at something like that, you see runway. It has runway to squeeze. Doesn't mean it has to go higher, but if we keep going higher like 5 or 10 points, this is going to start looking like it's going to ramp into one of the extremes, but it's just good context within any strategy to be keeping an eye on that. And you can't really trust the really short frames like this. You want to look for like here, look, 5 minute, it made that low. You wouldn't want to buy there. You want to buy here if you're day trading on the new low, higher momentum, more buyers and sellers. I don't if we don't keep pushing higher, like if there's any downtick from here, and we don't keep pushing higher, it's not happening. Most likely, we're going to get back into this zone, and we're going to close in here. To get this squeeze, you need to keep pressing highs right now, and likely see some stop runs and aggressive momentum at the highs. I can't even fucking look at Twitter anymore. Everything I see is just fucking retarded. My Jex models. PB Investing, my English teacher just randomly said, you can't make money trading. Should I show her my account? Dude's like fucking 16 years old. Oh, it's insane. What does the world come to? How did people lose common sense? That's the only thing I'm wondering. I will no longer be trolling on Twitter. I don't want to get in trouble again. But it's hard, man. You have a couple drinks over the weekend, taking a few back, and you just see some dumb shit that needs some trolling. That's how you guys know who I am. I gained followers from trolling. I don't think it's a sustainable route to go, though. How was your day, Anthony? You trade anything? Two shorts today. I hope you caught the two spots that you could have got. The watch? I'm gonna be a dick here, and Google's news had nothing to do with today's action. Unless your plan was on Google. Yeah. Yeah, I'm a noob with marketing. The open was what was the open? What did we do in the open? There was one point where I was like, not when we got to the 4220 SPX. I thought we were going to stay at 4225. It was fine if we peaked below, but we shouldn't have broken that. If we had broken that, I would have probably been less bullish. But as soon as we held that, it was. If we had weakness, it had to come really early on.
You want me to put away? You gonna eat?
Yeah, later. What did Tesla open at? Oh wow. Yeah, Tesla's especially after a period like we just experienced, Tesla's like the gamma goblin of all the big names. And Nvidia. I love Nvidia this late in the week. I used to just trade like Tesla. I used to trade Nvidia too on like the Thursday Friday moves if you're looking for a gamma move. You can get some crazy gains like an hour and a half into Friday's XP on a you can I'll turn like 6 cent contracts to like $6 on some of those moves when we have a gamma day. That's a huge move though. What were the 250s at last night? Let me see. Oh, let me keep an eye on the market. I can still sell these for like 30 cents. And I want to finish off one ad. It's 3:30. This isn't really a squeeze up, by the way. This is not decisively bullish structure yet off the low. Having positive flows does not immediately mean that we start making new highs. It means that you would not expect weakness to be sustainable. And at the very least, don't keep shorting for lows and expect more of a choppy environment. But yeah, the next 2 days you could still get some vol. Vol is still bid. There's still positions open. And after this move, it creates, without squeezing and really getting into the vol crush, there's still a path where we whipsaw back down in a very volatile way. Because if it happens, if we don't have that move tomorrow and we get into Friday, as time passes, all those puts that are open, unless they all get monetized, meaning they get exited or traded against, they're open. They're worth barely anything. And if we don't really confirm the low and have a bullish impulse up, it leaves the door open in the short term, just the short term, for you to have a whipsaw back down into, and it ends that way a lot of the time, down into here. Ideally, I would have liked to see us during the open come back down and like do something where everyone's jumping over each other to buy some puts. We don't need that though. This isn't that type of decline. This isn't a year-long trend down or something broke, and we're in a trend up this year. Everyone's super bearish on Twitter. I don't know why. If you're a new trader, you should be bullish above the 200-day and bearish below it, and not overcomplicate it. I was bearish from August highs, but I wasn't bearish long enough, and I wouldn't try to. If you're just looking to stay on the right side of the year-long trend, which we should not expect to change into, which is an up year into Q4 with skew still elevated. If puts were super cheap and there was a lot of different warning signals that the tail risk was a higher chance of that us getting into that distribution, the end of the tail, I'd be so happy to be short. I'd be so happy to expect vol to come back, but we don't. We have not had that. Every time I've thought things were getting bearish, it's a situation like this. Like it doesn't, to have some major break of a year-long trend. It takes more than a run-of-the-mill pullback. It's going to take a vol event, some change in liquidity, or this to end from the upside. That was not a blow-off top. Doesn't need to be a blow-off top. But I feel like people think this move was a lot more violent to the upside. Yeah, it was violent in 7 names. It was a pretty pretty huge year after coming off the back of what we had last year, but I don't feel like it was anything out of the normal, especially from an option standpoint. Everything was mild. There wasn't any crazy. There was a couple days that had really big moves. In the context of the last few years, especially with the rise in retail participation in options and institutional participation in options, we were used to seeing some really crazy moves. A couple times a year we had like a multi-sigma move, whether that was up or down, and we'd have periods of higher volatility. This has been low volatility all year. We have not had volatility. This has not been a squeeze to the upside all year. This has been normal price action to the upside in a market that was trading down the entire year last year. Where prices not seen since 2 years ago. We have not made new highs. This is nothing crazy. And I think it needs to get crazy before it ends. I don't think anyone's ready for it to get crazy. No one thinks it can get fucking crazy. Everyone's calling this a bubble, but have any of you guys like looked at how a bubble how that price action looks? You might get a good idea the last quarter of this year, maybe into the first quarter of next, but the price action this year was not a bubble like move. Nvidia might be a bubble, AI might be a bubble within a bubble, but that was like the first stage in the move. If Nvidia keeps hitting its numbers, it can go up during a bear market. It can go parabolic while everyone wants to short the name making the craziest hitting the craziest numbers. Like some of the craziest numbers I've ever seen on their reports. Why the fuck do you want to short that? Like short TSM that might get invaded by China. Like there's so many other semiconductors that don't have a product that pretty much have a monopoly on AI right now. There's worse places. There's better places to short than picking the generals of the market. I have no clue what I was even talking about at the start of that rant, but we're here now. And if I didn't explain my expectation for the next 2 days, it's dependent on tomorrow morning. The squeeze here will give me a higher confidence on this being a low that we can build off at the end of the week. If it's the low, we're going to rip to 43.50 by Friday, in my opinion. If that's the low, that's my favorite. That's the best way this will shape up. The only other path on the upside is it could come back to 4,300 and come back here, and then we end up back at 4,300 or maybe 4,320 by Friday. It makes more sense to get to 4,350. There's so much unwind that will occur once we really get into the next impulse, if this is the low. If it's not the low and we're coming back down, it'll happen on the back of tomorrow's AM move by 11:30 or noon. If we are not reversing lower, breaking, there's going to be levels from intraday positioning. Here's a squeeze. There we go. From 5 cents they were trading at. I almost added like 200 just to fuck around. 4275 calls are trading over $1 now. What's the best app to use? I'd have to know what you're using it for. I'm going to assume you're talking about trading. And you'd never use an app to trade stocks. It's fucking or options. You're gonna get. If you're a beginner and you don't want to get better, then you can use a trading app on your phone. If you're not gonna ever be able to trade, and I think the best platform for executions is Interactive Brokers, hands down, for retail. I use for retail traders, IB is the best. I think TD and IB, or TD Ameritrade, Thinkorswim, and Interactive Brokers both have great mobile platforms. Tasty Trade has a great mobile platform. Robinhood, there's nothing wrong with Robinhood and Webull except for the fact that I don't fucking trade on Robinhood or Webull. There's just get a TD account. Like, there's no reason you want to trade on one of those. They're fucking terrible. They're selling your orders. I used to use both of them for free commissions on lottos. If I'm trading like 500 contracts or 1,000 contracts, that shit adds up. So free commissions is cool, but it's just a terrible way to trade. You're not trading. I'm sure some people do great with it. I don't think it's a great place to learn how to trade. I don't think you can really trade from your phone unless you're just monitoring positions or doing all your work prior and you're in risk-defined spreads and you have all your information posted. I don't think you can just trade from your phone. You have like no information. I don't know. I couldn't do that. I've never seen anyone that does that. But yeah, my favorite platforms from my phone, it's definitely Interactive Brokers, with TD being a close second. I like TD for all the tools they offer. It's all free too. You can just make an account and use them. But TD has the best. I'm just used to it. I think people like get used to something and however they learned on, and they just kind of get stuck with it. I think IB is better for option probabilities, and looking at some their option and their volatility labs is better. But there's some great third-party apps too and websites that offer some volatility stuff. A lot. You guys gotta be really weary of like some of the stuff that is marketed to you, because a lot of it is wrong information. Like, a lot of the times I see flow stuff and volatility stuff that's just outright posting wrong information. Not a lot of them, but some of them, they don't even match up to executions correctly, and anything with a dark pool, don't even fucking bother. Dark pool does not matter. You don't know about shadow banking. You don't know what's going on. You can't make inferences with that. There is no backtest I've ever seen that dark pools matter, or significant or large prints on the dark pool orders matter. Might work sometimes, but it's you have no idea what they're trading. Like, someone trading common stock gives you no edge. You have no idea why they're buying or selling. If there's usually 99% of the time options tied to dark pool orders. You don't know if the options are indicating the other side of that. It's just like really vague, not even naive. It's just meaningless information. Unless you're, there's no way any of you guys are going to be able to understand or make inferences that are actually like edge from the dark pool market. It's just people transacting orders they don't want to do on the open market. Or hedging. There's a lot of hedging from structured products through there if they're using indexes. It's nothing. It's not like some smart money secret. Oh shit! Google new high. I'm gonna take my rest of my Google off. Out 1x.97. I'm gonna hold 1x. Yeah, I'm gonna hold 1x on Google. I'm willing to lose that 1x. If you're not, you should take more off. Let me take that. I'm adding to display. If you're in the group, check it out. And Posted the exit on that. Points in 15 minutes, it's not possible. I actually think it's likely. It's just whether we get over 75. See how we never have downticked really? Like if we had started anything that wasn't pressing highs, this would not have sustained over 60, or we wouldn't have seen any of this move. We haven't really continued up. After that spike, actually, we're gonna need to keep at the 345 is the end of day rebound. That's when it starts, and everything looks like it could definitely stop where it's at. Like if I'm trading, like we're long Google from pretty much the lows, and if I'm not trying to be greedy, and it's a couple days expiration, I expect this gets to 136. I honestly expect it gets higher, but we're making new highs. We have not confirmed highs yet. I think we're going to confirm highs. It's just if I'm going to continue holding risk on that thesis, I'd rather roll it up, or change how I'm positioned. It's just when you're up, we got in at like 30 something cents. You got to take the money on those. You don't want to. Convexity doesn't mean you hold for like till it goes in the money. You want to take advantage of when something goes from cheap to like 0.5, 0.7 delta, and then exit, and you can take a new position. You don't want to wait, because the payout, it ramps up. It's slow. It ramps, then it's slow again. You don't want to be part of the last bit of the curve from 0.7 delta or 70 delta to 1 delta. That part is slow as fuck. You want to sell from the bottom of the convexity to the top by like 0.5, 0.7, where you're getting that exponential return. Everything above that, you're not getting. It's not worth being in an option. It's better. You're better off if you're trying to take advantage of that, doing a rollout and roll up. I feel like it would make sense if I had like a whiteboard. You can look up convexity in a chart and you'll see it's just like a curve. Whenever you hear these words, these might sound intimidating, but it's not rocket science. You can probably get to some rocket science level math. That's the shit I probably can't figure out. But overall, a lot of the stuff that sounds, intimidating is not really that complicated. I am here tomorrow. Yeah, I'm not going to be here Friday, and I'm not going to be here Monday. I don't think. I don't know my flight's in the morning, or expect me not to be here Monday too. I mean, I'm going to go over like the game plan. Overall, I think there's two things. We have the low, we're good. I'm just gonna manage, and then come back next week and probably do some ads for the core thesis once we confirm. Otherwise, if we have downside and new lows on Friday, I would definitely be adding. Yeah, I'd definitely be a buyer. So I'm either buying or I'm doing nothing. And tomorrow I'll go over. I'll probably take some, depending on tomorrow's action. I might take overnighters and just make sure I sell them before the close from my phone or some shit. Do some spreads or something. I'll just buy for next week to not be a degen. We'll see how cheap things get, depending on tomorrow's move. Well, today is the first day that data and release did not become a sell-off. Also coincides with my bottom call. I don't know if it's a coincidence. We'll see. No, but yeah, that could easily get us. Fuck, there's a lot of data this week. Jobs out tomorrow morning. I thought that was. Forgot about that, to be honest. When there's data and stuff like that, it's especially like after the move we just had, it's pretty insignificant no matter what the fuck they report, unless it's something like from left field. We just had so much event vol and vol heading into quarterly expiration. Nothing is going to supersede that. You're right, Lewis, except today. What do you mean? We had data today. Today, the paradigm might have changed. What else do I want to do? I gotta wait. I have like amazing reads. Everything I'm looking at that I've wanted to add is I'm getting signals to buy pretty much everything, but I've had that for like last 5 to 7 days now, so I'm not. Overall, I think any price you get here, even if we make new lows, anything around these prices, you're gonna be fucking ecstatic that you bought at these levels in a couple months. All year, everybody wanted a pullback. We get a pullback. Now the world's ending. I'd love if we got volatility and it was the real deal, but yeah, I don't like losing money. I don't want to. Shorting this market for, like, unless you're intraday just shorting. There's been some great spots, and overall, some of the best trades I've made have been the times I've shorted. But shorting the market, if you're holding overnight and using options, it's been great intraday, but everything's been really fairly priced for the outcomes. There's been like a couple instances, like could count on one hand, that we've exceeded the expectation that options were pricing in beyond a 1 to 2 day move. Like everything's been very fairly priced. I can go out to a 3,800 put and take in like $10 for a month out, less than a month. That's insane. That's not what happens when there's a crash coming and everyone's holding that. And the dealer is very well hedged for that outcome. Unless there's a black swan, it's almost unachievable. But the next day or two, the end of this move could definitely be, if that wasn't the low, the end of this move could definitely be ugly. And tail off another 50, 100 points below what I marked up. But you wouldn't expect it to stay there, and it'd probably retrace that move by the close. If that were to happen and I'm away Friday, I'm just going to be buying on the close on the remaining stuff I wanted to add. Alright, I'm going to do a couple more things. I'm out of Google. Did its job. If you're holding Meta, which is like right around, it's what's it, down a dime? Yeah, it's down a dime. Expect a zero on that. I'm holding that into tomorrow and Friday. We need the bull move for that to work, and if we get the if we have the low and we continue on this path, and at a minimum through tomorrow morning, we have the data in the morning. Yeah, just sell if you're not okay with the zero on any weeklies that are still remaining. I don't really have too many weeklies remaining, but if you're not okay with the zero on some of this stuff, just come in tomorrow. Wait till we have more context. But I'm gonna hold Meta. I cleared house on most of the other stuff. We got 200% on most of that stuff. My largest trade right now, in the short term, is still the 4350 horizontal calendar. Like if we close between current spot and 4350, it's profitable. If we close closer to 4350, it's going to be up about $20 on 50 cons. And if I hold it to next week and we squeeze, it could be worth more than that. And that is what I plan to do. I'm going to probably take half off. If we close close to 4350, I would take half off and hold 25 contracts in the next week. Got 6 minutes left. I just put an order in to sell the SPX at Summit 1 and Summit 5, just in case there's a spike. Probably not hitting, but we'll see. Unlikely. Would lean like a closing high here though. Alright guys, it was a pleasure hopping in here with you all today. If you guys enjoyed the live trading today, make sure to comment and like the post I just tweeted. We're going to be coming in here at least once a week. That's the plan, and doing public live sessions. If you have any interest in joining, you can do so through the Discord, and it'll send you to WAP. And yeah, if you have any questions, don't hesitate to reach out. I know someone just hit me up for the TOS scripts. I'm going to send those over your way in a second. Hope everyone had a good day and got made some money on the work we were posting. It was a pretty easy day. No problem, man. I'll talk to you soon.